Good morning, everybody. Welcome back to another episode of the Market Open. It is Wednesday, September 4th, 8:46 a.m. We are here live once again, and we got a lot to talk about. Dude, this is going to be a very interesting market open. This is the first market open after a 10% collapse in Nvidia that we saw yesterday. After hours, if you were part of the market close, we got some breaking news in the last 10 minutes of that stream on why Nvidia likely fell 10%. Because I know a lot of us were wondering yesterday, market's down 2%, Nasdaq's down 3%, some individual tech stocks. Even the way we started the market close, I was looking at a lot of the stocks at 345 yesterday, and I said, you know what? Meta's down a little bit, Apple's down a little bit, but Nvidia right here, Nvidia is just down a gigantic amount. So contextually, the reason for all the red or all the pain that people are feeling is really because of Nvidia. And we didn't know why. It was kind of just all right, I guess the earnings weren't. I guess $30 billion in 90 days isn't that good. And after hours, we actually found out what happened for Nvidia. So if you don't know about the news, we're going to talk about it today. That'll be our first subject to go through. But that was very, very interesting stuff to figure out. And now today's market opening is going to be very important because this is the first day after that 10% decline. Nvidia lost $278 billion of market cap yesterday intraday. I think it lost another 10, 15 billion after hours. So call it 300 billion in a day, worst since August 2nd. And the worst time before that was in April, back at the midpoint of April when the Israel Iran situation was breaking out. So really, this has been one of the worst days ever for Nvidia, which was yesterday. And today is going to be a question of if that ends up being sequential and we get another bad day, or if the buyers step in, and we'll analyze what it's going to take for some of the buyers to step in to get this to turn around. Additionally, we have Jolts data at 10 a.m. So job openings. We'll look at the expectations, but last time we had about 8.4 million. Theoretically, if we have less jobs open, then maybe those are more people that are getting hired by these jobs. There's other ways you can interpret the Jolts data, but we'll see how the market reacts to that at 10 a.m. The Jolts data, I don't even know if we can fully trust the extent of that data. Yes, I do believe there's 8 million jobs open, but a lot of these jobs could be ghost jobs, fake jobs. So there's a lot of different ways to interpret it, but we will see how the market reacts to that at 10 a.m. if that number comes down a bit, and if the market likes if the number comes down, or if it goes up, and if the market likes that it's going to go up. We also will talk about the broader indices. S&P and QQQ both had really rough days yesterday, down 2 to 3%. Again, the damage to individual stocks yesterday, kind of minimal. I mean, you had outside of the semiconductor space where stocks were down on average 8%. Everything else was, you kind of took it on the chin and you just moved forward. Today, we'll see if that pain continues in the semis or if it rotates into other sectors. And then we'll talk about some earnings that we had today and yesterday. Zscaler was yesterday. GitLab was yesterday. We had a couple earnings this morning, so we'll talk about all that stuff, go deep into it, and keep going from there. Lena says he's going to pretend like he's not late. Dude, it was 1 minute late. And again, it's the StreamYard delay. It's not my fault. I go live. YouTube takes 30 seconds to start it. So theoretically, if I start at 8:46, I'm live at 8:45, and then it's up to the universe at that point to deliver it on time. Otherwise, I would have to start at 8:44 to time it exactly at 8:45. But then that's not fun because then you guys can't say I'm late. So, we got to start at 8:45. Thank you, everybody, for being here. Lena, Katie, Mario, Bay Ray, what's up? What's up? June, General, GE. Someone says, if a mid had an entrance song, what would it be? It's a good question. I'm curious of your answers on that one. It might be the John Cena song, You Can't See Me. I think it might have to be that song. It might have to be that song. Miami, Ren, Wong, Invest, what's up? What's up? Jonathan, thank you for being here. William, Dean, Joseph, Jarrett, GE, Northwestern, Gene, Daniel. Thank you, everybody, for being here today. Nolan, Victor, what's up? What's up? What's up? Emad, Alex, Daryl, Colorblind Collector, Lose Yourself. Oh, I like that one. I like that one a lot. Lose Yourself. I love it. Oh, the Dawson's Creek theme song. That's gotta be the one, dude. That's gotta be the one. Felicia, Midwest, Miguel. Thank you, everybody, for being here. Single Lady by Beyonce. Maybe that's actually the better one. Also at 11 a.m., I will be live on the stream. I will be audio streaming on the YouTube stream, Twitter Spaces with Arnie, Iliano, Chad, all the Palantir people that you guys have probably been introduced to on the channel, and Matt Babin, who is the head of Palantir Energy. So the global head of Palantir Energy will join us for about an hour on Twitter Spaces, and we will discuss all things energy and Palantir's future in that energy business. So at about 10:55, I'll get that set up. And then at 11 a.m., we'll have that conversation with him live on the stream as well. All right. So I think let's get started and let's do what we got to do with Nvidia. Let's talk about what the hell is happening with Nvidia and see what's going on right here. Joseph says, I got my Palantir merch delivered to Nigeria. Thanks, Amit. Awesome, Joseph. And Joseph, let me know if you got the $100 voucher, because I'm pretty sure you should have gotten it by now, because you won it on that giveaway. So just let me know. If you didn't get it, I'll message Iliano, but I'm pretty sure he sent it to you. So just make sure to DM me on Twitter if you haven't got that yet. But I'm pretty sure you should have got it to your email. But if not, let me know. Okay, cool. So what happened yesterday after hours? Well, the DOJ comes out, the Department of Justice in the United States of America, and they say, you know what? We don't like this much success. We don't like that Nvidia has a monopoly on chips. We don't like that Nvidia can have 75% gross margins on chips. We don't like that Nvidia is basically having a tax on all of the hyperscalers that they have to pay. And if they don't pay, and those hyperscalers don't make any money, or they're not able to get the chips that they need to get the momentum. So they said, you know what? We are going to put a subpoena and escalate an antitrust investigation on Nvidia, because Google, Amazon, Microsoft, Apple, they shouldn't have to pay $50,000 for just one chip. There should be more competition for chips. There should be so many chips. It should be like Dorito flavors. It should be ranch and spicy. By the way, the purple one is the best one. It should be nacho cheese. It should be jalapeno. It should be all these different types of flavors. We shouldn't just have one chip. Therefore, we are investigating you. Nvidia fell 2% after hours. It's still down at that 106, 105 level in the pre-markets right now. And as you can see, it was down 9.54% of the day. So basically, it was down about 12%. Now, to me, this is kind of explaining the 9% drawdown. The 9% drawdown during the day made no sense. It was just like, what, dude? Like, if you were going to have this like aggressive drawdown, that drawdown should have happened after earnings. That didn't happen after earnings. They went down to 114, then it rebounded, stayed kind of flat. Like, there was no argument in the air that, oh my God, Nvidia's so overvalued, or oh my God, their guidance is so bad, or they didn't beat by enough, or Blackwell. Yeah, like all those resounding arguments that the bears thought would collapse Nvidia, which is why a lot of people that bought puts they got screwed on their puts, because the premiums weren't high enough to print, because the volatility wasn't strong enough for Nvidia to go to the downside. Like, that just didn't happen. So why randomly on September 3rd do we wake up and Nvidia falls down 10%? Like how does that happen? And I think that happens because obviously there were people, probably institutions, again, a 10% down day on Nvidia. That to me yesterday was not retail. That's $300 billion. I mean, you could say retail participated in it, but I don't think retail is the far majority of why that happened. That seems like heavy fund managers realizing that they need to take some profits. And if they needed to take some profits, the question is what prompted them to eagerly take those profits to the tune of $300 billion of market cap destruction. And I think that's probably because they realized that DOJ lawsuit is going to get pretty aggressive. If Nvidia was only down 3% yesterday and then the DOJ lawsuit came out, they probably would have fell the other 7 or 8%. But the only reason they're down 2% right now is because most of the selling was done. It's like most of the sellers already sold because they knew that DOJ stuff was coming, so they didn't need to sell after hours. But if they did it, if it was like a full blindside, then I would expect there to be more volatility after hours. So what is my take on this? What is my perspective on this? First of all, we will have Jose joining at 9:45. One of our favorite semiconductor analysts. So he'll be on in about an hour. He'll give us his take and what he thinks about what's going on with Nvidia. My take is that America is shooting themselves in the foot. And this is how you collapse the Roman Empire. Now, some people think, Amit, you're stretching it a little bit too big. Dude, at the end of the day, this is my take on this. I think it is unbelievable that we want to prosecute Nvidia for being too good. The argument that Nvidia is a monopoly is correct. Nvidia is absolutely a monopoly. There's like, if it wasn't a monopoly, they wouldn't be able to charge $50,000 for their chips. The problem is in America, you're supposed to work your ass off to eventually become a monopoly, right? To an extent, right? And like, there's obviously different boundaries in how you understand that stuff. But for 30 years, Nvidia stock basically did nothing. They developed all the intellectual property. They went through all the trials and tribulations. Jensen was the one trying to figure out how to get it to work for gaming and crypto, and then eventually generative AI and accelerated computing. Other companies did not have founders that worked at Denny's washing dishes and then decided to start a company and sell 20% of it to a lawyer on a napkin and go through that entire journey just to get to the point where they are today. So all of the intellectual property they developed, all the chip designs that are proprietary to NVIDIA, which allowed them to be able to do what they're doing today, which is charge $50,000 for a chip and have the biggest companies in the world willingly pay it because it's so important that they have to pay the Nvidia tax, is all legal. None of it was illegal for them to go through these mechanisms to get there. And now the DOJ is basically saying, hey, this company is too successful. We need to break it up. I think the same thing's happening with Google. I think you can make a broader argument for why Google is a more egregious monopoly in terms of their search business and some of the practices they've done. But even from that perspective, I just think if all the companies in the world that are producing all the wealth and prosperity and innovation in the world are in America, Nvidia, Google, Amazon, Microsoft, Meta, Apple, etc., the DOJ has a lawsuit against all of them. Has a lawsuit against all of them, dude. Like, Apple's getting sued, Meta's getting sued. Like, Lena Khan is just like suing everybody. To me, it's just, this is stupid. This is absolutely stupid. We'll get Jose's perspective in about an hour, see what he thinks. Overall, my philosophical perspective here is that we should not bite the hand that is feeding us. Nvidia has created $3 trillion of prosperity. Lots of people have become millionaires. Lots of tax dollars that Nvidia investors in capital gains and Nvidia employees in state income and federal tax are paying funds the DOJ in the first place. And so the idea that you want to break them up, to me, makes no sense. That's my kind of philosophical perspective. But from a more practical perspective, I just don't think this lawsuit has a chance. I think this is one of those things where the DOJ is trying to do what the New Brunswick police did to me at Rutgers when I went in college, and I unfortunately parked in an illegal parking spot for a couple minutes when I went to like go get something, and then I would come back. I would have a ticket. I would have a freaking ticket for $25, and it would be so annoying because it's like it's not like I was parking there for an hour. It's like I just needed 5 minutes to park. I had to go get something. I'd come back with a ticket. I think this is a parking ticket. I think they want a settlement. I think they want Nvidia to say, yeah, we're a bit too successful, but here's what we're going to do to try to get out of this conundrum that we're in. I don't think you can effectively say Nvidia is a monopoly and then call for them to somehow break up their intellectual property so that other chip makers can compete. Here's a fun stat for you. Intel was bigger in market cap 15 years ago than Nvidia and AMD combined. Why is Intel now stuck at the same price that it was at 25 years ago? Well, Intel didn't innovate. Intel didn't have someone like a Lisa Su or a Jensen Huang that were just ruthlessly competing to understand where the next form of evolution is going to be when it comes to accelerated computing and generative AI. So from that perspective, like practically, what do you want them to do? You want them to somehow break up? You want them to like help their competitors somehow get momentum? Like, I just don't know what the implication of this means. This is a subpoena, so this is not like a full-on we're coming after you DOJ to Google type of thing. This is one of those things where, hey, we're trying to find some evidence if you violated antitrust practices, which, you know, maybe they'll find some stuff here and there that's inconsequential, but I don't know what the full implication of it is. For Google, I think there's a better case that like you can break up some of the ways that Google uses search advertising to like shun out competitors from getting certain forms of digital revenue. Like, I think you can make that argument. It's a little bit more clear. For Nvidia on a hardware product, I just don't know what you want them to do. By the way, all these other semiconductor stocks, let's take a look at the semiconductors right now, then we'll move on to some more macro stuff that are performing in the pre-markets. And let me know what you guys think. Do you think this DOJ, well, I'll make a poll in the chat. Do you guys think this DOJ lawsuit is reasonable, or do you think it is not? So let's say DOJ Nvidia lawsuit reasonable. Let's do the word reasonable. What do you think? Yes or no? All of these semiconductor companies that are benefiting right now from increased share appreciation. Here's the semis. Wow, everything's red on the left-hand side of my screen. All of them are only benefiting because of Nvidia. So if the argument by the DOJ is, hey, Nvidia, you're stopping other semiconductor companies from succeeding, Micron, Dell, Lam Research, ARM, Marvell, TSM, Qualcomm, Broadcom, ASML, ON, Intel, SMCI, AMD. AMD up a little bit in the pre-markets, and that's the only one that's up. Everything else is down. AMD is up 2.6%. The only reason they're succeeding is because Nvidia created this massive marketplace for them, right? Like ASML doesn't have a marketplace unless Nvidia is winning. TSM doesn't have a customer unless Nvidia is winning. And by the way, these guys don't have customers unless Google, Meta, Microsoft, Amazon are not buying the Nvidia chip. So I think there's so many downstream effects for Nvidia's monopoly that allows the prosperity and wealth to be created for all these other companies down the drain that have created so much prosperity and wealth. You know, we're talking about trillions of dollars of market cap for other investors and employees. I mean, literally, Nvidia is the reason why TSM and Taiwan has a GDP that's growing. because Taiwan Semiconductor is almost $1 trillion company inside of that country. So it's kind of asinine to me for how the DOJ is approaching this. But I agree. I really do think it's going to be a traffic ticket. I don't think it's going to be that big of a deal. We'll get Jose's perspective. He probably understands this a little bit more in depth, and he'll talk a little bit to the specifics of it. But I don't think this is one of the broader reasons why Nvidia is in trouble. I do think this is a reason they sold off, though. Like that 9% that I'm looking at right now, down 9.53% yesterday, that definitely seems like it was because this got leaked. I don't know who leaked it, but someone leaked it. And that's what you got going on for Nvidia. Did Pelosi sell? No. So this was a rumor on Twitter that went viral yesterday because some people just thought they should make up fake news. Pelosi did not sell her Nvidia. We would know. There's no form indicating that she sold. By the way, I don't think Pelosi is going to buy 20,000 shares at $120 and then sell at $100. Pelosi doesn't lose. It doesn't lose like that. So no, that's a rumor. That's fake. It's not even a rumor. It's like not real. Like someone just posted it to post it. But yeah, that's fake. Pelosi did not sell. I mean, maybe we'll get a form in the next couple of days saying she sold, but so far we don't have any evidence that she sold. Final thing on the Nvidia topic. Nvidia already had to deal with antitrust issues when they wanted to buy ARM back in 2018. So they were going to buy ARM for like $48 billion or something like that. It was a decent, it's September 13, 2020. So it wasn't 2018, 2020. Nvidia was going to buy ARM for $40 billion right there. This was their press release on September 13, 2020. Consideration of $40 billion to be met through a combination of Nvidia shares and cash. The DOJ stepped in and they said, you're not going to be able to do that. And then if they actually acquired them, I would give you the argument that, okay, maybe Nvidia is too powerful because ARM and Nvidia are some of the most important companies on the planet. ARM is one of the most important companies in the chip process for AI. This probably would have been a little too aggressive if Nvidia acquired ARM. Now, granted, I still think like, hey, if you got ARM at a good deal, that's kind of like Facebook grabbing Instagram or Google grabbing YouTube, right? Like it is what it is. ARM now is worth about 150 billion. You know, at the time they were going to be bought for $4 billion. So if they acquired ARM, first of all, Nvidia might be like a $4 trillion company by now if they actually acquired ARM. But if they acquired ARM and then the DOJ wanted to go after them like 5 years later, I would get it. I don't think it would have a chance, just like the DOJ wanted to go after Facebook and Instagram. It's like, dude, the acquisition is 12 years done. Like you're not going to be able to reverse that. But then I would at least understand the argument. If you blocked them already from becoming like a super monopoly 5 years ago, you already did your job. You like stopped the process of like this insane monopoly from being created. Like, why are you stressed out now that they became a $3 trillion company absent the acquisition of ARM? Like, it doesn't make any sense to me. The DOJ did what they had to do. Now it's done. So to me, I think it's time to move on. But nonetheless, we'll see what happens. Today's market is going to be today's market open is going to be really important because now the question is going to be, okay, after the market has digested this Nvidia news, it's down about 1.34%. How is it going to open? Right? Like, how is it going to open? Are the buyers going to step in at 105, 106? Was that sell-off of down 10% from the DOJ stuff just like an algorithmic, big money manager sell-off because they didn't want to deal with the pain, but they're going to step back in? Or was it retail that just got way too scared? And then if they see it go back up to 115, they're going to start chasing it and buying it again. Like, I think there's so many different variations on what happens. Also, could the extent of the selling pressure just be done because everyone realizes actually this is going to be a traffic ticket and it doesn't matter? Right? So we'll see. We'll see. Maybe Nancy Pelosi set this up so she can buy more. Maybe this. That's the other thing, dude. Nancy obviously would have sold before this happened, because there's no way she doesn't know. Like, this is Nancy freaking Pelosi. She obviously knows if the DOJ is getting ready to sue a company. I mean, she invested in Nvidia a while ago, before the CHIPS Act even came out, which put in a decent amount of money into a lot of these companies. So I think it's obvious that this DOJ lawsuit doesn't matter too much. We'll see the implications of it. If we do get a form in a couple of days that Nancy sold, it will be the most egregious insider trading of my life. Again, we don't have any evidence of that. But if we find out that Nancy sold like 2 days ago before this news came out, I mean, it would just be crazy. It would be absolutely insane. But I don't think that's the case. I think Nancy buys it at 120 because she's bullish for the long term. I mean, she doesn't buy it at 120 because she thinks this thing is like overvalued or in a bubble. You know, that it's just not Nancy's nature. She ends up winning on a lot of these trades because she has access to insider information. And so because we get to see her trades, I think it gives us a little bit of an understanding of how she's thinking about it. But that's what we got in the context of Nvidia. Nancy's the best investor in history. Correct. Nancy's the best investor in history. So SMCI down 4%, AMD up 2%, ON down 1%, Intel down another 2.5%. Intel just getting absolutely smoked. ASML down 5%, Broadcom down 1%. They have earnings in a couple days. Qualcomm down 1%, Taiwan Semi down 1.3%, Marvell down 0.6%, ARM down 1%, Lam down 1%, Dell down 1.7%, and then Micron down about 1/3% on the day. And that's what you got in the context of Nvidia. So let's see what happens. Let's see what happens in the context of the broader lawsuit. And today at 9:30 is going to be a very interesting market open to see how the DOJ decides to do what they need to do. 5 minutes is illegal parking. I know, but like the point is, dude, it's like it's one of those things where you could be doing something that's illegal, but do you really need to get punished for it to such an extent, right? And I think that's the same thing we're here. Like all these companies engage in anti-competitive monopolistic practices to an extent, but at the end of the day, they are contributing so much. For example, I mean, let's make an argument right here. I paid a lot of money to Rutgers for tuition. I needed to illegally park. I think in that situation, I had to like get something from a class. I like left a textbook, like some random situation, right? Back in college. All the money I'm contributing to this campus doesn't mean that what I'm doing is not illegal by illegally parking for 5 minutes. But it does mean you kind of give someone a break. It's like not that serious. They're contributing a lot of money to this campus. They're spending a lot of money in the local economy, which fuels the entire campus's revenue. So like, do you really got to punish them for a small mistake, or not even a small mistake, for an intentional purposely thing they did just so they can make their life a little bit more efficient? All these companies engage in anti-competitive monopolistic practices, but we're supposed to overlook it to an extent. Again, there's boundaries to this, but to an extent, if, for example, they worked 30 freaking years to come up with the right chip design and wait for the exact moment where generative AI would even be relevant. Like, I think you give that company a little bit of a break and you don't say, oh, for 30 years, they were engaging in monopolistic practices that got them to this point. It's like, no, they weren't. Maybe they had some things that were monopolistic here and there, but the far majority of what they did was not bad. You know, the far majority of what I did on college was not bad. I was just a regular student, but for 5 minutes, if I illegally parked, I don't think that's a reason to tax that person to death with these laws about how you need to pay for a ticket. So from that perspective, you could say I had to pay the $25 ticket because I didn't want to go to jail. Nvidia is probably gonna have to pay some type of ticket, but is that ticket really deserved? No, not in my opinion. Not in my. It's not in my opinion. Some of you might not agree with this argument. Look, at the end of the day, all of these companies do what they need to do, and we are beholden to the wealth and prosperity that they create. They're allowed to get away with some of this stuff because the benefits that we get from them is way more important than the downside. I mean, this is the whole concept of tax write-offs. Like, is every tax write-off a good thing in the world? No, but the reason you have tax write-offs for corporations and businesses is because they employ so many people that you'd want them to take off certain write-offs legally, even though a lot of people think it should be illegal, in order to fuel more wealth in society by creating more jobs and prosperity. So you can philosophically disagree with how you conceptualize it and you know, do it in different ways, but to say that the Justice Department should make a statement by going after Nvidia, to me, is just ridiculous because they worked their ass off to even get to this point at the end of the day. It wasn't the New Brunswick police, it was the parking authority. You're correct. It wasn't the police. It was indeed the parking authority. Dude, I got like 5 or 6 tickets, dude. I got a decent, that's why it's stuck in my brain. I got a decent amount of tickets. You know what it is? It wasn't even illegal parking. What it is that I remember near my apartment that I rented, from 1 to like 3 p.m., there was a certain section that you weren't allowed to park in. But that was the section that I needed to park in. And like, that would be the time where like the parking authority would just like go crazy and start to like hand out all these stupid tickets, because I had a permit because I lived on campus. So I obviously had a permit to that allowed me to park on campus. It's just certain parts they were annoyed with. But the point is, I think Nvidia, this is not going to be a big deal for them in the long term, but if it is, then it's sad, because at the end of the day, for all the people that want the DOJ to sue them, okay, what's the inevitable conclusion? What's the inevitable conclusion? Do we break up Nvidia? Does the $3 trillion company go back to 500 billion and we take off a bunch of different portions and outsource? Like, what is the conclusion to what we do? Do you want me to leave Rutgers campus because I illegally parked for 5 minutes and have to pay $25? And now the $100,000 of tuition I paid goes away, right? Like, when we're doing a utilitarian cost and benefit analysis, it doesn't seem to make any sense to get rid of them based on what they're doing, rather to overlook some of the quote unquote bad practices because what they're doing outweighs the bad. And when the good outweighs the bad, I think that's where we get to, you know, reasonable cost benefit analysis in terms of a society that is more utilitarian at the end of the day. Rodney right here says antitrust laws are nothing more than a communist-style attempt at centrally planning the economy. Look, I mean, maybe this is probably what I wanted to say, Rodney, but you said it in the in a more intellectual way. I kind of agree with this, dude. There's a lot of nonsense antitrust laws that are trying to punish the wealth we're creating in America that is uniquely created in America by trying to centrally plan and organize and nationalize how companies should exist. Obviously, I'm being a little hyperbolic here, but you get the point of what I'm saying. The logical extent of this stuff is punishing success. And I don't think we want to punish success. Okay, now on to our next topic. Something that's more important than the DOJ and Nvidia. DICS. This is one of my favorite subjects. I've enjoyed talking about DICS for a very long time. We've been analyzing DICS on this channel for a decent amount of time. And I think that it's important to look at DICS and how big they've truly grown. Because this is what allows us to understand, how we can participate in DICS. Sporting goods up 60% year to date. They had earnings this morning, and this morning they had some pretty damn good girthy gains, as Jake says right here in the chat. So DICS earnings actually I thought were really good. And one of the reasons I think it's important to analyze some of what's going on with DICS is because not only did they beat on the top and the bottom line, but they raised guidance. So here you go. This is what we got in DICS. DICS Sporting Goods reports second quarter results, raises 2024 outlook, 4.5% comparable sales growth, delivers double-digit EBITDA margins of 13.9%, 3.47 billion of net sales, up 8%. Reported earnings per diluted share of $4.37, up 55%, raises full year 2024 guidance for comparable sales growth of 2.5 to 3.5%, and raises full year 2024 earnings per share to $13.90, up from $13.75. CEO says we delivered a very strong second quarter, powered by our compelling omnichannel athlete experience, differentiated product assortment, best-in-class teammate experience, and our ability to create deep engagement with the DICS brand. We are driving sustained top-line momentum and gaining market share. Our Q2 comps were driven by growth in average ticket and transactions, and with growth in sales, gross margin expansion, and SG&A leverage, we delivered margins of nearly 14%. Because of our strong Q2 performance and the confidence we have in our business, we are again raising our full year outlook. Now, why did I want to talk about DICS? Why is DICS so important? Well, again, it goes to this argument around the consumer. I mean, people are not shopping at a Nike as much because maybe they're shopping more at DICS. I think what we're seeing here from DICS Sporting Goods, which again at the end of the day is raising guidance and is a retailer, is hey, we're up 60% year to date. Don't take away the gains you've given us because the consumer is fine. We're raising our guidance. So they can't be lying about the consumer. They're down a little bit right now in the pre-markets. I think they were priced to perfection. I mean, they're up 60% year to date. So I imagine they would be down a little bit right now. But basically they're saying, hey, the consumer's fine. We're up 60%. You guys have obviously loved our performance. There's no reason to take away our performance or the gains you've given us because we're literally raising our outlook. You can't say DICS is faking what they're saying about the consumer if the numbers they're showing are raising their full year outlook, because if they don't hit those numbers, then they're going to miss on earnings next quarter and for the full year of 2024. So I think this is very encouraging in the context of the consumer. I know a lot of people are struggling with, is the consumer good? Is the consumer bad? And we'll talk more about that with some of the macro data that comes out at 10 a.m. But at the end of the day, if DICS is saying, hey, people are shopping here, it means they're not shopping at Nike to get their clothes or to get their bikes or their sporting goods. They're not shopping at other outlets that may be providing the same types of products, which means A, the consumer is being cost conscious and they're choosing DICS. B, it's consolidating. And if it's consolidating spend in one retailer that's getting more of this momentum, kind of the Walmart, Costco, Target argument, then that's the retailer that should be getting more of the money ultimately from the consumer and from investors. So again, when everyone says the consumer is dead, they're strapped out of cash, they're not winning, you may see a selective consumer consolidation in certain areas, and you may see consumer weakness in certain types of consumers, for example, the ones that always shop at Dollar General, but you're not seeing a massive pullback across every single consumer. And I think some of the bears that look at this stuff is not, I don't think they're acknowledging this at a deeper level, right? Like this is like saying, oh, well, people are spending at Walmart, therefore that's bearish. It's like, dude, if you're going to be bearish, then okay, just be bearish forever. But like spending at Walmart and Target and consolidating your spend and not shopping at other retailers does not mean the consumer is dead. It means the consumer is being conscious and being like, hey, why do I have to go to Nike's Foot Locker and pay $20 extra for a shoe when I can go to Dick's and get $20 off? That is a good thing. That means Foot Locker. By the way, you know what that really means for Foot Locker? That means they're going to have to lower prices, which is going to be great for the consumer and great for inflation, because Foot Locker can't have a 2% extra margin if the consumer is just not going to Foot Locker. They're going to Dick's to be able to get their sporting goods or their sneakers. So I think in general, that creates a reverberating effect across the entire retail industry where other manufacturers and retailers have to decide to lower some prices. This is exactly, by the way, what we saw in Target. Walmart had amazing sales. Target got smacked in Q1. Why? Because 5,000 of their items were still being priced as if we were in 2021 and people just got stimmy checks. So this quarter, they lowered all those prices. The CEO came on CNBC. He said, yeah, we have to lower some prices because obviously consumers were choosing other companies over us. And then Target was up 15% on earnings. Why? Because they had people actually start buying their shit because people were willing to pay. It's not like the consumer's not willing to pay you. They're willing to pay. They're just willing to pay a more reasonable price. I think that's exactly what's happening at Dick's. And from that perspective, it's good for the consumer, good for inflation, and at least showing that if the consumer is slowing down, they're not aggressively slowing down to the point where they're just not spending. I mean, if we saw Dick's just like say, hey, we can't sell sneakers, like people are just not spending, then I'll admit, like, yeah, we got a problem. Like people don't have money. That's not what we're seeing. I mean, we're looking at the data, right? That's just not what we're seeing. The company's saying, hey, people are spending money. It's just being more selective where they spend their money, and the raising of the outlook I thought was a good thing to show that the consolidation of spend is happening at this one retailer. So that's what we got in the context of Dick's. And I think that was an important earnings this morning to show us kind of where the consumer is going. Let's talk about a couple of other headlines. Then I want to hear from some people in terms of what they think as well on Nvidia. So Zscaler had earnings yesterday. Now, this is very interesting. Okay. Zscaler on the CrowdStrike incident. He says, CEO, after the CrowdStrike outage, customers are more focused on resilience, which is our strength. In fact, I personally got lots of calls right after the incident. They wanted to know about what we're doing about it. This to me is the largest amount of horse shit that I read this morning. You know why? Because if you actually looked at the numbers on Zscaler, they lowered their guidance by 10% in fiscal year 2025, meaning Zscaler grew 34% last year. They're now going to grow 24%. You cannot have a CEO that comes on the earnings call, Zscaler right here, down 17%. Oh, wow. Like, who would have thought it's down 17%? The reason they're down 17% is because they lower their guidance. The CEO gets on the earnings call and tries to say, well, the CrowdStrike customers are coming to us because they're so concerned. It's like, he's full of shit. He's full of shit. The Centennial One guy's full of shit. The Palo Alto guy's full of shit. Oh, every CrowdStrike competitor that said, oh, the CrowdStrike people are leaving to us, they're full of shit. And I say that because when you listen to the CrowdStrike earnings call, you get George Kurtz. And again, I don't have a big position in the company. I have 5 shares, so it's not affecting me that aggressively, but I'm just trying to find out the truth. George Kurtz on the earnings call is like, hey, all of these competitors are spreading nonsense about us. Like literally, he verbatim says they're all saying nonsense about us because we are only stopping our guidance by 60 million. That's a decent hit to guidance, $60 million, but we're not like going out of business. We're not losing the biggest contracts in the world. We're continuing to compete. And I talked to a bunch of customers today before the earnings call, and I gave them some credits, and I said, hey, we're going to make you whole. We're going to fix you up, but we're not seeing that much churn. They lost, I think, 2% of the deal flow they were going to get in Q3 based on this incident. And if you're only going to lose 2% of the deal flow, that's not that big of a deal. So I think the Zscaler and cybersecurity CEOs that are going on these earnings calls and trying to use the CrowdStrike incident as an advantage for them, they're not showing it in their numbers, because if it was an advantage, Zscaler would not decrease revenue guidance by 10%. This is only a $30 billion company. This is still a company in its infancy of growth. Why are they stopping revenue growth by 10%? Like, that's not a good thing for a software business. This is like, and if CrowdStrike went down by 10% on guidance, they would get smacked. They'd probably be below 200 right now. They went down by less than 1.5%. Like, that's why the street was like, all right, well, for the leader in endpoint security, this is not that big of a deal. But I think a lot of the other cybersecurity names really just don't have a lot of meat on the bone in terms of what they're saying. So CrowdStrike right here down about 2%, Zscaler down 17%, Palo Alto down about 2%, and then S is also down about 2%. So all of cybersecurity taking a little bit of a hit, CrowdStrike taking a little bit of a hit as well, Zscaler taking the biggest hit right here, down 17% on the day. Now, on the contrary, to say that this is bad for CrowdStrike, you can make the argument that, hey, if Zscaler is lowering their guidance by 10%, then maybe that's not bullish for CrowdStrike, Palo Alto, etc., because I don't think they've given full year. No, they have given full year guidance, but they're going to have an investor event on the 18th of September where they like reiterate their full year guidance and like give you more accurate numbers. So maybe the market's like, well, if Zscaler can't have that much demand, then CrowdStrike and Palo Alto are also not going to have that much demand, and that's why all of these guys are down. I think it's kind of the opposite, though. I think Zscaler in and of itself is not winning in the cybersecurity space. The other guys are winning, and that's why they had to lower revenue guidance by 10%, which shouldn't be happening. If the cybersecurity TAM is dramatically increasing, then we shouldn't be seeing that bad of a decline on Zscaler in terms of the revenue guidance. But that's what we're getting right now. Nvidia down about 1.7%. IWM down another 0.33%. Kava Group down 1%. Airbnb down 1%. Carnival Group down 0.5%. S&P 500 down a third. Robinhood down 1.76%. I think it would not be crazy to see Robinhood under $19 today. We'll see what ends up happening. But Robinhood right there at $19.05. Palantir $29.90. It's going to be a very important day to see if Palantir can recover. It was at $29.60 last night on Robinhood's overnight trading. I think it kind of gaps up closer to 30 if the market is okay. If the market's not okay, then we probably make our way back down into the low 29s. But we haven't seen 29, 28 for almost 4 weeks now. So it will be interesting to see if that ends up happening today and if the market ends up being as bad. Also, again, at 11 a.m. for those that are just joining, we will be talking to the head of energy at Palantir on Twitter Spaces. I'll be live streaming that on this channel. So we'll be talking about that as well. And we'll get a little bit more context on what's happening in the context of energy. Okay, cool. So let's hear from Ed Yardeni and get his perspective on what's happening with the broader market and with Nvidia as well. And then we'll keep going from there.
This hour in the red, modest declines at this point, relatively speaking, to yesterday. Dow futures down another 70 points. S&P futures down by 21. The NASDAQ off by 133. Let's bring in Ed Yardeni. He's the president of Yardeni Research. And Ed, let me just ask you, it's September, it's back to school, it's back to work, and the market vomited a little bit yesterday. How are you feeling this morning?
Well, that's a good expression for what happened yesterday, absolutely. And it's kind of reminiscent also of what happened at the beginning of August. We're seeing quite a bit of choppiness going on in the market here. I think it may continue until the elections, and then I think we'll resume to new record highs. Of course, much will depend on who wins, and I'm rooting for gridlock. I was going to say,
does it matter who wins?
Well, I'm rooting for gridlock. So I think it matters if we get a sweep of the Democrats or a sweep of the Republicans. I don't think the market's going to look forward to those kind of regimes. I think the market much more prefers gridlock. So I'm betting on gridlock. I think gridlock will win. If that's the case, then I think the market will move higher simply because the economy is doing fine, notwithstanding the tightening of monetary policy over the past couple of years, all the geopolitical and domestic political stress. But all in all, the economy is doing fine.
What happened yesterday? We keep talking about this DOJ investigation into Nvidia, but the sell-off took place before that was reported by Bloomberg. So what really kicked things off? What are the underlying concerns? And I'm assuming it's about a lot more than just the election, because it doesn't seem like it was an election sort of issue that played out yesterday.
Well, it really didn't make much sense that all of a sudden the market started off with such a decline. Becky, I hate to say this, but it sure seems like there might have been a leak. The ferociousness of which the market took a dive suggested that somebody had figured out that something could come out in terms of bad news for the semiconductors, particularly for Nvidia. And then 10 o'clock, we had the Purchasing Managers Index come out, and that kind of brought in all the hard landers out there. That here is another example of a hard landing. The Purchasing Managers Survey of manufacturing is turning out to be another useless, misleading indicator of economic activities, kind of like the leading indicator, which hasn't been very useful. The reality is real GDP is an all-time record high. And by the way, it's an all-time record high in both services and goods.
Let me ask one more question on Nvidia, and then I'll let this go.
Sure.
Markets clearly aren't always rational, don't always make sense, especially in the short term.
Sure.
If Nvidia and if all these stocks were selling off, all the semiconductors were selling off because of the DOJ, Wouldn't the DOJ investigation be bad news potentially for Nvidia, but potentially good news for its competitors?
You would think so, but there's a lot of kind of internal dynamics to the market that have nothing to do with fundamentals. I think we saw that in August where we had the carry trade unwind, and I think this was the semiconductor unwind. Just the knee-jerk reaction was, if it's bad for Nvidia, it's got to be bad for everybody else. But you're absolutely right; it shouldn't affect the rest of the market.
So, I kind of agree with that. Again, if you're just joining, the reason Nvidia was down 10% yesterday was because the DOJ decided to investigate Nvidia, and that is why it came out after hours. It fell 2%, but likely the news was leaked in the morning, and that's why it was down 9%. Wow, Nvidia now down 2.5%. We got 4 minutes until the market opens, folks. All eyes will be on Nvidia to see how this ends up opening. But as Ed Yardeni says right there, you know what? He basically was like, you would think that it's good for their competitors if Nvidia gets investigated, but his argument was, wait a second, Nvidia is so important to the broader semiconductor landscape that it kind of is really bad for their competitors because they bring so much to the table that you kind of want them to win at the end of the day. Like you could be competing with a company, but if that company is ultimately creating a lot of opportunities, then you don't want something bad to happen for the company. I think one example right here is like, for example, me as a YouTuber, I don't know if Google getting broken up and YouTube becoming like its own company is the best thing for me like on this platform, because one of the reasons I might be doing well on this platform, or structurally YouTubers have the abilities to succeed, is because Google offers so much support, like Alphabet, the parent company, to YouTube. I made this argument a while ago. YouTube could have like really bad profit margins because it costs a lot of money to sustain 500 hours of content being uploaded every single minute. And it's not just photos or memes. It's like real heavy 4K content. And they might be taking a loss on a lot of the YouTube profit margins, but they're making it up in terms of the overall ecosystem. So if you were to separate YouTube from Alphabet, is that really good for YouTube? I don't know. And so me as a YouTuber, I kind of don't know if that if it's good to break up Google, even though I think it's right, which I think there's a hell of a case for the DOJ around Google, but there's not as good of a case in the context of Nvidia. So I'll give the DOJ that there is an argument for breaking up Google. But would it actually be the best thing for someone like me who uses this platform every single day? I don't know. Would it be good for consumers if Google's AI algorithms, Alphabet's AI algorithms aren't intertwined inside of YouTube, which I would imagine there's a lot of cross-functional collaborations between the Google DeepMind team and the YouTube team and how they can make algorithms that are better for consumer content recommendations. Is that the best for consumers, which is the whole point of the DOJ investigating a company and trying to break them up? If they broke up YouTube, would that be the best for people using the platform and engaging with the platform? So from that perspective, not fully sure why the DOJ would be going after them outside of their own gains, or if they really put up some evidence in the next couple of days that, hey, Nvidia, like you guys didn't know this, but Nvidia did X, Y, and Z in 2007 and 2008, and that established the ability for them to have this, pricing power, and we really need to go after it. Maybe there's something there that we haven't looked at yet, and then we can reevaluate. But I don't know, and this is kind of Ed Yardeni's point, if we break them up, is that actually good for TSM? Is that good for AMD? Is that good for Intel? Is that good for ARM? Maybe it is, maybe it's not. So we will see how that lawsuit plays out over the next couple months. I imagine this is going to go on for at least months, if not years. And we're going to see, how that ultimately affects Nvidia at the end of the day. All right, so we got 30 seconds, folks. 30 seconds. And let's see. Pelosi did not sell. For anyone who came across that news, Pelosi did not sell. We don't have any news on that. Unfortunately, someone posted that on Twitter and it went viral. It got millions of views, but it's fake. Like, Pelosi did not sell Nvidia. We don't have any evidence of that. We might find out she's sold in a couple of days if she puts out a form. But if so far, we don't have any evidence on that. But we'll see in the next couple of days what ends up coming out. All right, here we go, folks. It is 9:30 a.m., the first day after Nvidia's 10% collapse, Wednesday, September 4th. The stock market is now open. All right, here we go. Here's Nvidia, ends 2% down on the day. There's a little bit of a green candle right there at $105.01. Now that green candle is going away. I think if it breaks below 103, 102, then I would imagine 100 is likely on the way, just given kind of how it looks and where support is. Wow, we hit 103 in the pre-markets. Okay, so we did hit 103 in the pre-markets. Now it's at 105.80. Down 2% is not as bad as you would expect. But let's see. I mean, this is a minute into the market open. We'll see how it goes. 25 million shares have been traded so far of Nvidia, which is just insane. So you got a lot of people selling and exchanging their shares, buying their shares. We'll see how that goes. All right, 106 down 1.85%. We'll go back to Nvidia in a second, but so far down about 2% on the day. Palo Alto down 4.2%. CrowdStrike down 2%. Wow, Zscaler down 16.43%. A little bit of a green candle right there. So the bottom was getting bought up at 184, 158.49, but still down on the day. DIX down 8%. Okay, so something they didn't like in that earnings call that is happening probably right now must have been said on DIX. They raised their full year outlook. Overall guidance was good. One of the reasons I think DIX is down is that they're up 60% year to date. And if we're heading into a little bit of a volatile time, you're not going to keep a stock that's up 60% year to date continue to be up 60% year to date, especially if you're a retailer. The thing to get it from DIX, again, if you're just joining, they raised their full year outlook. They beat on the top line, beat on the bottom line. CEO felt very confident in their opening remarks on the press release. So makes sense that the consumer is being more conscious and consolidating their spend at DIX, which is a good thing for the consumer. But stock was up a lot this year, and that's why they're probably down. Same reminds me of Kava. Kava was up like 150%. Now it's up like 120%. So fell 30%, but probably because it was up so much from the January lows. Carnival at $16, Airbnb at 114, TQQQ down about 2% on the day. S&P 500 down 1/3%. The S&P 500 down 1/3%. Where is Palantir? Palantir opens up at 29.54. Wow. There you go. Red candle. Red candle on Palantir. We haven't seen 29.5s in 4 weeks. Not in 4 weeks. I would imagine Robinhood's under 19 right now. Robinhood just at 19. Okay, so Robinhood, it hit 1881 for a second, then bounced. We'll see if it goes below 19, but it's right there at 19, down about 1.9%. Nvidia continues to be down 2.2%. Palantir 29.67. Some of that dip is getting eaten up a little bit right there, down 2.72%. The dip gets really exciting for me on Palantir at 27 and 25. If we get to those levels, I don't know if that'll happen, but we'll see over the next coming weeks, given the volatility, if that ends up taking off. But we'll see. DIX is now down 10%. Zscaler, disgustingly down 17.4%. SoFi down another 1%. SMCI down 5%. Let's look at the semis. It doesn't look good for the semis. Yeah, everything's red outside of a few names. AMD is up a little bit. TSM's up 0.5%. Qualcomm's up 0.5%. And Micron's up. Dell's down 2%. ARM's down 2%. Marvell's down 1%. ON is down 1%. ASML down 5%. Intel down another 1%. SMCI down 7%. Goodness gracious. I mean, I don't know what's the reason it's down even more outside of it falling Nvidia, because the 10K stuff I think has been resolved to an extent. But you know what might be happening? People might be saying, well, if Nvidia is a cyclical business, then SMCI is definitely a cyclical business. And now you might have some of the narrative, as Mohammed El-Iran said a couple weeks ago, there's probably a ton of narrative volatility happening right now in the broader market. And if the narrative takes over that Nvidia is a super cyclical business and that they're eventually going to not get the same CapEx spend, yada yada yada, that might end up being the thing that hurts Nvidia and obviously hurts SMCI as well. I don't think those narratives are mainstream yet, but Nvidia drops to 95. You don't know what narratives can catch steam. Coca-Cola is green. I would imagine Berkshire Hathaway is a little green on the day. Berkshire is green indeed. Berkshire now a $1.04 trillion market cap. Buffett continuing to prove that he can do it without needing to bet a ton on tech. CrowdStrike down about 2%. So most of the cybersecurity names are down 2 to 3%. Zscaler is getting hit the worst, down 17 because they lowered guidance by 10%. But outside of that, the rest of these guys are kind of taking it on the chin. The Bitcoin miners, again, are down 2.3%. That is the ETF. Where's CleanSpark right now? Goodness gracious, dude. CleanSpark down another 4%. Well, so last night, I don't know if you guys were up at like 11:30, but we did see a bit of a flash crash on a couple of things. So the Nikkei index in Japan fell 4%. And now Bitcoin right here at 56,000, Bitcoin fell 5%. Let me check if the Nikkei is still down 4%. I think it is. Yeah, it's down 4.24%. Why is Japan down again? I don't know. I really don't know. My best argument is that it's because of the Nvidia fallout. That's just having ramifications across the entire world. Google right here is green on the day, 158. And again, the reason Nvidia is having a fallout on the entire world is because we talked about this right before Nvidia earnings. Most of the world's money is in Nvidia. Japan, the Saudi money, Korean money, Indian money across the entire world is consolidating into American tech stocks. That's kind of the reason why the Japanese carry-in trade happened. But a lot of that money is going into Nvidia because they don't see any other alternatives to invest their capital outside of Apple, Microsoft, Meta, Google, and then obviously Nvidia being the kind of golden child of that Mag 7. So if Nvidia takes a 10% hit, that's money across the world that's being wiped out. So if you've got some, Nvidia losses, you might have to sell some of your Nikkei, you might have to sell some of your Taiwan heavy-weighted index. That was down 5% yesterday, probably because Nvidia fell, so TSM fell 8%. So you've got global volatility because of one stock, which is why I do agree that if Nvidia could stop being this important, it would be nice, because to have this much volatility, Meta's down 1%, Microsoft's down 1%, Apple's down 1%, just on Nvidia, it feels like it's too aggressive, dude. It's like this thing needs to chill out and the street needs to stop being so scared of every single move Nvidia makes. But as of now, that's how, it's playing out. And Nvidia is controlling a lot of the momentum. So Chris has this headline right here. I did see this yesterday. Bank of Japan governor said the central bank will raise interest rates further if the economy and prices perform as expected. So I saw this yesterday. I didn't know if this was that big of a deal, because he's kind of just saying whatever he wants to say. It's like, I think if they actually tried to raise rates, they would get a couple calls by some very important people. And, those calls would incline them to just think twice about what they're doing. So Nvidia right here, just under 105. Now we're at 104, down 3%. So the green candle is not helping it. Maybe that is a reason the Nikkei fell 4%, but I kind of felt like the dude was just talking to talk. But that headline is definitely not good news that they're going to think of raising rates. And if they raise rates, the carry-in trade goes back into effect in terms of if there's still money in that carry-in trade. If you raise the rates, the cost of borrowing becomes harder, then your short on the yen starts to implode, then you have to sell off U.S. assets to pay back the loan. Like all of that stuff we went through in early August ends up becoming a reality again. And so I would hope the Bank of Japan does not continue to raise interest rates. So that's what we've got going on right now. Wow, Nvidia still falling, down about 3.3%. Where's SMCI? SMCI down 6.3. So SMCI still getting hit. CrowdStrike down about 1.85. CleanSpark down about 4.3. Robinhood still above 19. Still above 19. So Robinhood holding above 19. Palantir 29.40. So Palantir continuing to get the red candles. Looks like all of AI stocks are taking a broader hit. Tesla's up. Tesla's green. Elon did say XAI finished building out one of their super clusters, so that's good news for XAI. Tesla doesn't own a part of XAI yet, though, so it doesn't really impact Tesla directly financially. But that is good for Elon. TSM getting a little bit of a bid here. SoFi right here at 747. Google at 159. Again, this lawsuit on Google. I made this point yesterday on the market close, but if you are buying Google, I think you are being a contrarian for two reasons. Number one, you're buying Google in the face of LLMs not disrupting their search business, which could be the case, could not be the case, right? But that's a contrarian bet, because I think most people think the 10 blue links eventually is going to die out. Maybe Google ends up monetizing LLM search, but outside of a subscription tier, I think it's going to be a little hard to figure that out. I'm sure they have plans, but if you're buying it right now at a 20 PE, which I think is a wonderful price to be buying it at, you are buying it with that risk that you have to think about where LLM is going to take search. And then number two, you're buying it and being a contrarian because you believe the DOJ lawsuit is really not going to result in anything tangible, which I think that's an easier way to be a contrarian than the first point. But buying Google right now, it is definitely cheap on a PE basis. The problem is that DOJ lawsuit is an overhang, and then the broader LLM search stuff, people are getting a little bit more concerned as Perplexity is rising in value. ChatGPT is getting more investments by Apple. You start thinking, hey, is Apple getting in bed with Sam Altman and they're not caring that much about Google anymore? Google's not going to be able to pay Apple $20 billion a year to have the default search engine in Safari. All of those things are things that are overhanging on the stock right now, which is why the stock is cheap. But obviously, if you're buying it, you believe that none of that stuff is really going to have a tangible impact. Amazon right here at 174, Meta at 507, Spotify 331, Shopify here at 70.66 on the day. Rocket Lab and Google are the only green stocks. Where's Rocket Lab? There you go. Shout out to Matt Money. Rocket Lab is up just a little bit on the day. Waiting for 18 on Hood and 7 on SoFi. Yeah, I think those are reasonable targets. Those are my targets as well. I would want 17 on Robinhood versus 18, but we'll see if we get there. Again, the question is, how bad does this dip get? Because yesterday was a red day, but it was a red day that didn't feel as red unless you were in Nvidia. Like if you were in Nvidia, it really hurt. If you were not Nvidia, it was volatility that should be normal at this point. It's like, it's all right, a couple 1%, 2%. It's not that crazy. In the NASDAQ, 3% is bad, but it's not the end of the world. It's not 7, 8, 9% in a day. And usually they tend to recover the day after. S&P's down a little bit right now. The NASDAQ Yeah, it's down another 0.5%. You know, that's bad, but it's just not, it's not horrible. Nvidia is, you know, trying to break $104 right now. So really, I think a lot of the pain yesterday came for people in semis and Nvidia. SMH, Jose will be on in 5 minutes, by the way, so we'll get his perspective on what he thinks on Nvidia. SMH right here down 1.16% yesterday. SMH, which is the semis ETF, yeah, it's down 9% in the past 5 days. That's bad. You know, an ETF being down 9% when it has, I think this has like a couple $100 billion under management. That is aggressive. That hurts a lot of people. Still up year to date, 31%, the SMH ETF. But the Qs and SPY, you know, did not really have that type of pain. If you were in Bitcoin miners, it hurts pretty bad as well. Correct. Bitcoin miners took a little bit of a hit as well. Again, if you believe in Bitcoin, I think the miners are going to be okay. I know I've been a little bearish on miners, but at the end of the day, if Bitcoin really does go to 100,000, the miners are going to be fine. Like I think all the Bitcoin proxies are going to be fine. They might not be the 4, 5, 6x people are thinking they're going to get, but I don't think, you know, CleanSpark's stuck at $8 if Bitcoin's at 100,000. But now the question is, can Bitcoin even get to like 60, 70,000 given the lack of liquidity and volatility that we're seeing right here? So Bitcoin under 57, 56.5. It was holding 56.5 nicely throughout the past 10 hours. Last night on the flash crash of 5%, it fell to 55.6. So it's up about $1,000 since then. We'll see if it can regain that 58, 59 level, but holding on to this 56.5 level. Mr. 100 last night at about 11:30 bought 200 more Bitcoin at this 56 level. So we got an update from that last night, but outside of that, most people still ended up selling a bit more. IWM continues to go down. Small caps not getting any love. Airbnb down about 0.06% right now. Google still is in the green. SoFi down about 0.5%. Tesla's green, up 2%. Nice to see Tesla getting a little bit of love right here. Tesla going green. So Tesla has unveiled this ASS thing. I was so confused yesterday because everyone was like, "Oh, have you seen Tesla's ass?" And I was like, "What are you guys talking about? Like, what is going on?" It's apparently it's actually Smart Summon. That's what it is. So here's a video of it. But it's this new way for them to like do parking or something. Let me show this real quick. And this might be the reason why Tesla's up right now. So to make quick decisions and deal with pedestrians and parallel park, all that good stuff. So there's the car doing its own thing. Still amazing to see this stuff, by the way. This is just crazy. But that's a new software update they rolled out apparently yesterday, and a lot of people are excited about that. It's in 12.5.3 on FSD. This, again, to me, dude, this is the best use case of AI. This is like the most practical. This is AI embodied. This is why I'm still bullish on Tesla, even though the stock's been volatile for the past 3 years. But I don't know how you can't believe this is not the future to an extent. Now, I'm not going to be the first person in these FSD. Everyone else can try that out. But once it's proven to be safe, then I'll jump in. But there's plenty of people willing to try it and be the guinea pig. But at the end of the day, I think they're going to make a crap ton of money from this, and the gross margins are going to be exceptional. So there you go. That's what's helping Tesla right now, and that's why Tesla is up a little bit as well. That's probably, I would guess, why Tesla's up 2.2%. Where's Nvidia? Oh, Nvidia's recovering. A little bit of recovery. It was down 3%. Now it's down 1.3%. Little bit of a recovery. Little bit right there. This is a robot company, 100%. I would say Tesla absolutely is more of a robot company. All right, so Nvidia right there at 106.44. Let's look at the index, S&P 500 right here at 551. So that's recovering a little bit as well. QQQ, yeah, that was down 0.5%. Now it's down 1/3%. There you go. You got a little recovery right there. We'll see if it lasts. And in the semis names, you got some that actually go green. Taiwan goes green. Qualcomm goes green. AMD continues to go green. SMCI was down 7%. Now it's down 4.5%. Micron just went green. Dell was down 4%. Now it's down 1.3%. So you're getting a little bit of a rotation in terms of these semis, and I guess we'll see if that can hold on for the next couple of hours. All right, folks, let's bring on our favorite semiconductor analyst onto the channel, get his thoughts on what's going on with Nvidia, try to make sense of some of the pain that we're seeing right now. Ladies and gentlemen, you all know him, Mr. Jose. Jose, what's up? You are muted, sir.
There we go. Good morning. How's it going?
Good morning. How are you, man?
Pretty good. I mean, I haven't looked at my portfolio to keep the morning good. So that's where I'm at right now.
All right, so Jose, let's just get into it, dude. For those that don't know Jose, he's been in Nvidia for the past 7-8 years. His largest position. He knows this company, I think, better than pretty much everyone on YouTube. Stock fell 9% yesterday. There's a lot to get into, but why do you think the market sold it off yesterday?
I mean, I feel like it's a lot of everything. I think you've talked about it in your channel before that maybe like some people are coming out due to picking up some gains. And yesterday, I think we got a nice amount of bearish news for Nvidia. I think I saw 3 bearish news come out yesterday. First was AMD was poaching some talent out of Nvidia. Then we also saw that the Department of Justice was going after Nvidia and a lot of other companies as well. I think they're even going after like Microsoft. So it's a lot of other big names, but obviously headlines left to put Nvidia right now. And the final thing that I saw yesterday was OpenAI was kind of in talks, and there's reports that OpenAI is kind of developing its own AI chip. So I think there was a lot of noise happening and just the overall market downturn that everything just got amplified for the semiconductor space. So a lot of everything. But in all those things that I just covered, I don't really see anything that would be something that as a long-term investor, I would worry about right now.
Okay, so let's start with the DOJ lawsuit because that's probably the most important news. Mm-hmm. Can you give me some specifics? Why is the DOJ subpoenaing? How do you say subpoenaing? Why are they serving a subpoena to Nvidia?
So, I mean, everything right now is based on reports. We haven't really heard anything from Nvidia itself because it's still not official. So right now, I think we've talked about this earlier this year, where the Department of Justice was getting some questions here and there. So those were the original reports. Yesterday, it got updated that, hey, like based on the questions, now they're asking for actual documents, but it's still not an official case yet. I think once we get an official case, that's when maybe we will get hear from Nvidia. But right now, it's all based on reports. And the 3 main things that they're looking at right now, based on these reports, is first, Nvidia is making it impossible for customers to change to other competitors, either via hardware or software. The second thing that they're talking about is Nvidia is doing illegal anti-practice stuff by if you don't purchase all their equipment or the full stack, you're not going to get the full support from Nvidia. Right. And the final thing that they were talking is just there was a recent acquisition that Nvidia made in the AI space that they're also keeping a closer eye on as well. So those are the 3 main things that they're looking at right now.
Okay, so the argument that Nvidia is making it impossible for people to use other chips, is that Nvidia like holding a gun to Sundar Pichai's head, or is that their chips are so good that Sundar has nowhere else to go?
I think right now, from what we can see in the outside world, right? From what I'm seeing, I think Nvidia's technology is just so good that it's not impossible, but Nvidia's ecosystem is just so much better than everybody else. There's no point in transferring over to another ecosystem. Or, I mean, at the end of the day, if you're a developer, where are you going to develop? A place where other developers are spending their time, and you know you're going to have more innovation and you're going to have technology improve at such a rapid pace, or you're going to start developing in some new software ecosystem that many are not using, and you're hoping that eventually it'll turn up, and all this time wasted, you're gonna it's gonna come to some good economics or something like that. So I think right now,
why do you think the DOJ is like? Do you think they have any argument at that point? Or is there any point? And I know like we don't have full details yet, but do you think Lina Khan can be like, hey, Nvidia did X, Y, and Z, and that's why Google and Microsoft keep spending more money with them? Versus the counter argument from Nvidia, which their lawyers are going to be like, hey, we spent 30 years developing our technology. That's why we keep getting all this revenue.
Yeah, I mean, the only thing I would say is if there's some money trail of something where like Nvidia is paying like developers or is paying somebody off. That's the only way I could see it. But outside of that, no. And obviously that's not an impossible case. I'm not going to say that that's not impossible. But based on the technology, I think if they were to have done that, it's pretty stupid on their end.
Got it. Okay, so another question on Nvidia. We're seeing a little bit of recovery right here at 107, fell to 104. Do you think that 9% drawdown yesterday was because someone leaked the DOJ news?
I mean, the whole market was kind of down yesterday, so it could have been. I mean, obviously, someone always knows. This isn't some higher ups always know about stuff like this, so that definitely could have been the case. Not saying it's impossible, but I'm not going to say it's the sole reason for the big drop.
Got it. And then in terms of the actual the stock itself, I mean, does it get attractive here, or do you think the volatility is still so high in September that you'd rather just wait and see if it can get to 90?
I mean, for me, Nvidia right now, anything under 100 or around these levels isn't half bad. I mean, if you're to invest in Nvidia, you need to be bullish in the AI segment. If you're not bullish in the AI segment, if you think AI is fake and AI is not going to do anything, then Nvidia is definitely not the stock for you. But if you believe in the AI market, if you believe CapEx is going to continue to grow, if you believe that they're going to continue to be a competitor in this space, there's a lot of believing. But if you are following the stock, you get the answers to a lot of those questions. I think Nvidia definitely attractive, but volatile in the market is always pretty crazy in September. For me, $100 seems very, very attractive.
Okay, so the question here then I have, last thing on Nvidia, then we'll move on to Intel, is this idea by CapEx. I'm hearing a lot of chatter that Nvidia's revenues are unsustainable because CapEx is going to stop. And because you understand the specifics of like these chips and Blackwell and all this stuff, here's my question for you. Obviously, there's a world where Google stops spending $20 billion a quarter on Nvidia. How quick do you think that world is? Because from my understanding, if Google has like 100,000 H100s, but Blackwell is 10 times better, they have to upgrade, because if Meta's upgrading and Microsoft's upgrading and they don't upgrade, they get left behind. Is that logic correct? And where do you see CapEx spend going over the next couple of years?
So I definitely see that being correct. I think what's going to be the most important thing is seeing how AI is innovating. It's good to always keep a closer eye on in kind of like those AI startups like Runway, obviously like OpenAI, and see how they're developing. Are the changes in their upgrades, is version 3 of Runway better than version 2 of Runway? Is it a dramatic growth? What did they promise for version 4? So you can kind of see if innovation in the AI market is kind of stalling, or is it still growing at rapid levels? Based on what we're hearing, like GPT-5 is going to be some crazy growth from GPT-4. So I think right now we're still seeing that high innovation in the AI space and huge kind of bump ups in kind of technological solutions. So as long as that continues to be the case, I think these big players are going to continue to invest in these AI chips. The moment these kind of AI solutions start to slow down in forms of upgrades, maybe that should be a time to say, hey, look, if there's a slowdown, maybe the big tech players believe that right now they don't need too much computational power, so they're going to reduce on CapEx. So I think it's important to look at those startup companies and see how they're innovating over the next few months and years.
Yeah, I 1000% agree. I've been researching a lot on startups, and I'm going to start bringing up some research on the stream in a couple of days on the AI startups I'm looking at. And there are some of these startups that are raising a lot of money. And when you look deep into them, like some of them are like crappy, but the ones that are raising like 60, 70, $80 million in their Series A, they're raising that money obviously because they have to pay for all this compute, but they're doing stuff that's really important. And you could imagine a world in which one day that company's, bigger than it is today, all based on the premise of AI. So I agree with you. If you're buying Nvidia, even at these prices, you have to be bullish on AI long-term.
Definitely.
Intel. So do you believe in this whole restructuring nonsense? And do you think the investment bankers can clean up the company?
I mean, Intel I think Intel should sell out of all markets that they're in, except to their core products, which is their CPU for data centers and for the consumer space, and the manufacturing. They should sell out their FPGA. They should sell out their networking, everything else that they have right now, and they should just focus on those two markets. The other thing I think Intel should do is Intel is building manufacturing all around the world. They're building here in the United States, in Europe, and I believe in other, maybe even, I forget where else. But I think Intel has the potential of being a huge manufacturing leader. Now, this potential is something that would take multiple years. So I believe Intel is that money for now. But if Intel comes out and says, hey, look, we're only going to build manufacturing plants here in the United States, and we're going to become the sole manufacturer in the United States, and we're going to be a pure American company, I think investors will like that. And that could be a reason for the stock to go up. But right now, it's a lot of what ifs. I think the manufacturing has potential, but it's going to take a lot of time to show results. Muted.
Sorry. Do you think they should scrap the foundry business completely or no?
No, definitely not. I think their only hope is actually the foundry business.
Wow.
Yeah.
Interesting. We got Palantir going back up to 30, guys. Tesla 218. Nvidia seems like it's making a decent recovery, still down 1% of the day or 0.5%. Okay, Jose, AMD and the competitors. So I was making the point that Nvidia goes down. That's not good for the broader semiconductor landscape. Do you think, as an AMD shareholder, Nvidia getting hit a little bit is AMD's opportunity?
I think so. I think one good thing about AMD is, while Nvidia's most of its expectations is all on AI growth, for AMD, it's very diversified growth. So a lot of the expectations is still the consumer market, is still the CPU market, and obviously the AI accelerator market. So I think AMD has a lot of opportunity because analysts are looking at it as a diversified case, opposed to Nvidia, where they're looking at it as an AI space, as an AI case. So I think AMD is potential, and one I really do like at these levels as well.
Okay. Last question for you, Jose. This is one we've got coming up this week. Broadcom. First of all, can you please tell us what this company does again? Because I think most people in the chat forget, including me. And then B, do you think they're going to have a decent earnings?
So Broadcom, they hit a lot of different markets. They create kind of chips that go on networking solutions. They also have this segment where they help big tech players build their own custom AI chips or custom chips in general. So I think they help Amazon build the Graviton. They help what are some other players? I forget who. They might help Google build their TPU, which is their AI accelerator. But regardless, they help big tech build AI accelerators. That's one of their growth opportunities right now. There are reports that OpenAI has actually chosen Broadcom, not confirmed, on helping them build their next AI chip. So there's a lot of potential here. And in the networking side, they are very similar to Marvell. Marvell last earnings mentioned that their overall core markets outside of AI are picking back up, so Broadcom can definitely benefit. And finally, they did recently purchase VMware, which is kind of like a clouding computer, which obviously we know the clouding market is doing pretty well. So Broadcom, definitely an important player right now in the AI space and can definitely benefit from everything. But it's definitely seen a nice amount of run up. And with the overall market sentiment right now, I can't say how this would do after earnings.
Okay, a couple rapid fire for you real quick. So just like yes or no's and maybe a sentence of answer. Do you think Tesla's the best real world application of AI?
In forms of robotics and mobility, yes.
Okay, Google, is this an undervalued AI play?
They have a lot of data, and with that data, they can definitely go in the right directions. I haven't seen their valuations, but they're definitely a strong player in this space that many people overlook.
All right, and last one for you, SMCI, is this dip or is the sell-off overdone?
If you got to pick a side. If you believe they did nothing wrong, this sell-off is an opportunity. If you believe if they did something wrong, this sell-off is just the beginning.
All right, I love it. Jose, thank you for joining. We really appreciate it. This is Jose's YouTube in the chat. Please make sure to subscribe. Also, Jose is now live streaming, what, 2 times a day? Or 2 times, not a day, 2 times a week?
2 times a week, yeah, usually around 8:30 Eastern time at night, yeah.
All right, so he's getting into the flow of live streaming, so make sure to check out his live streams as well. I was in it last night. It was really good information, and we'll see you next time. Thank you, Jose. Thank you. It means a lot.
Appreciate it. Bye.
Yep, bye. All right, folks, we've got Jolts in about 30 seconds. We got Jolts job openings. The market's expecting 8.110 million. Last time we had 8.18 million. The forecast is 8.09 million. So the forecast and the consensus is pretty much the same at 8.09 and 8.110. So there you go. There's that number loading right on the screen. You're going to see it as soon as I see it in about 30 seconds, unless it's delayed 45 minutes like the BLS job revision was delayed. Then we should be good to go. And we should see what that number is for Jolts. And I do think this will have an impact on the market. Last time it definitely had a small impact. Or no, I don't think it was small. It was actually like, it was 0.5% up or down on the S&P. So let's see what happens. Oh, Jolts 7.673. Wow. Holy crap. 7.673. You guys saw that, right? 7.673 Jolts. That is a lot less jobs. The previous looks like it was revised. Yeah, it was revised. Look at that. Look at that, guys. The previous was 8.18. Look at the previous now. The previous is 7.91. That was 8.18 2 seconds ago. That was 8.18 million. That got revised to 7.9. Actually, that makes sense because we lost a ton of jobs, right? So theoretically, that makes sense. Now it came in at 7.673. Market hates it. Does the market hate it? Where is Nvidia? SMCI just fell. Oh my God, the market. Look at that red candle on Palantir. We were just at $30.20. The market hates it. S&P. Look at that red candle, bro. Holy crap. Oh my God, that's a red candle. There you go. Market doesn't like it. Market doesn't like it. Let me get CNBC's update on this as well. There's a lot of ways you can interpret this. It kind of depends on if you believe in the numbers themselves. It also is a question of if you believe in the jobs that are real or not. It also believes if you think people are taking up those jobs or if those jobs are going away. There's a bullish or bearish narrative for it. But as Matthias says right here, it definitely doesn't bode well for the Friday numbers. That is an argument you can make. That is a way you can interpret. Bank of America just cut rates by 25. Really? That just came out? I feel like I should have known that in the morning. I guess they did. I think you're right. Bank of America. No, sorry, not Bank of America, Bank of Canada. Yeah, no, you're right. 10 minutes ago, it came out. Bank of America. Why do I keep saying Bank of America? Bank of Canada cut its interest rate by another 25 bips. Okay, so that was expected. So that's good that it happened. But this Jolts data, well, it's getting eaten up a little bit. S&P was down. Yeah, it's getting eaten up. S&P was down a third. Now it's down a tenth. Palantir was at 29.70. Now it's at 29.95. Palantir's 5 cents away from 30. QQQ was down about 0.75. Now it's down 0.5. Robinhood was down a little bit more. It's recovering. Tesla's still green, 3%. There was the red candle right there, but now it's recovering. Market doesn't hate it. I mean, they did hate it for a second. So Bank of Canada cut rates, which is good. And then Jolts came down to 7.637 million jobs that are open in the United States of America. The market wanted 8.1 million jobs to be open. Now it's weird though, because the market was basing that 8.1 million number off of the previous number of 8.18. So if that previous number just got revised to 7.91, then is the consensus estimate actually 8.1? Because if the consensus estimate is actually 7.7, then we actually came in better than expected. But it really depends on how the market, I guess, interprets that revision. I didn't know they were going to revise the previous number, but I should have known that. It makes sense that they were going to do that. Let me go back to where the market's looking at this. Market kind of doesn't care too much right now. It was a red candle. Yeah, look at that. Palantir's back to 30. Look at that. All right, I guess the market doesn't care. And even Nvidia fell to 104 or 105.3. Now it's back to 107. Wow, that was like a flash little dip. If you had buy orders or limit orders kind of just set up right there, you probably got triggered on some decent prices that you wanted right there. Google still green. Rocket Lab still green. Did the S&P recover? Yeah, dude, look at the S&P. It's about to go green. Holy crap. The S&P is about to go green. The S&P just went green. The S&P just went green on that data. The S&P just went green on that data. The market did not care. You know what I think it is, guys? I think the revision of the previous Jolts, again, let me show you that number. I think that makes the consensus kind of BS because the miss on the algos doesn't make sense if you look at the revision number. This number, 7.9, was 8.18. So the consensus is 8.1. I think the expectation was 8.09, so still basically the same. If the estimate goes down to 7.9, this consensus has to go down to like 7.7, 7.8. It can't be stuck at 8.1 because you're basing it on a number that was revised. And then the actual number we got right here, 7.673. It's not the most bullish, but it definitely makes sense that the market is not freaking out about it. A, because the market fell a lot yesterday. B, because the revision kind of changes the consensus estimates on that number, which is not horrible. So that's not too bad. Again, the Friday jobs data, we talked about it yesterday. We're looking for about 125,000 jobs. That would be good. If it's bad, then we're going to see some more pain, but that jobs data is going to be some of the most important stuff that we have to look at. Dollar Tree is down right now. I didn't get a chance to look at that one. Dollar Tree is down. This makes sense to me because Dollar General was down. So Dollar Tree right here, yeah, they're down 20%. Look, it makes sense. I mean, these are low cost items. These are consumers that are on the weaker end of the spectrum. Dollar General said the people that shop at their store make less than $35,000 a year. So you'd imagine those consumers are definitely getting hit. That is not a good thing. That's obviously not good for the broader economy. I will acknowledge that's like bad. I do think there's a bifurcation of consumers though, and what's propping up the economy are the people that are paying for Uber, Lyft, etc. And so far, those people have not pulled back, which is important because if you're going to do sort of an analysis of the consumer, we have to look at all types of consumers. So if the people at the Dollar Tree are spending less, that's bad. But if people spending on Uber stop spending, that's really bad. And I don't think we're at that really bad spot yet. And hopefully the rate cuts can stop us from getting to that really, really bad spot. But that's the debate between bull or bear. If you're bullish, you believe that can happen. If you're bearish, then you believe that's probably not going to happen. Would you buy Dollar Tree right now? No. I mean, any of the retailers, if you buy them, you have to believe they have a growth story and you have to believe that the consumer is going to be healthy enough. Like even Dick's, I wouldn't buy Dick's because it's up 60% year to date. Now it's up 50% because it's down 10% right now. But B, even though they raised their outlook, if I don't think the consumer is going to be super, super amazing in 2025, I would stay away from the retailers because outside of Walmart and Target, where most consumers are not going to leave, it's a little scary to take that bet, right? Because what if we do get into a recession and people are like, you know what, I don't need a new pair of sneakers. I'm just not going to buy them. I'm not going to go to Dick's. I'm always going to need Dick's because I like Dick's. But besides that, you can't ask people that, you can't ask people that, that don't want new sneakers to start shopping there. Fed Gov Bostic pretty much confirmed a rate cut is coming. Did you post that, Chris, on Twitter? Let me check. Bostic has been one of the more bullish ones over the past couple of days. Let me see if there's a video of that, Chris. Let me know, and I'll pull that up, and we'll see what you got, or you can send it to me on WhatsApp as well. Where is Bostic? Did he just say something? Let me see. Let me search on Twitter. That might also be why the market. Oh wow! So Bostic just said four things. A, the Fed is in a generally favorable position. B, the Fed must stay vigilant to ensure inflation risks continue to wane. C, soft landing for the economy may be within reach. Wow. D, we must not maintain a restrictive policy. There you go. Those are four quotes. By Bostic. That's nice to see. I think he just did an interview right now. In Bloomberg, I think. Here's what he said. Here's the clip. I don't have the clip, but here are the actual quotes right here. That might be why the market's doing a little U-turn right now as well. The labor market continues to weaken, but is not weak. That's very bullish. Maybe he has some information on the jobs data coming out on Friday. We must maintain a restrictive policy stance for not too long, or we must not maintain. Business contacts point to a loosening but still broadly stable labor market. I am now giving equal attention to maximum employment objective as inflation. Honestly, this is not different from what he said. 2 weeks ago at Jackson Hole. I mean, he kind of literally said exactly these points. He's just reiterating them right now, which is good. He says, I'm not quite prepared to declare victory over inflation as risks remain. That's normal, data dependent. But in general, if he's focusing on employment over inflation, then that means he's focused more on jobs and loosening monetary policy. Which is a good thing. If anyone has the link for that, let me know. Oh, Chris said you put the link in the chat. It's weird. StreamYard doesn't show the link. Let me pull it up on YouTube. StreamYard sometimes kind of nukes the link. Let me pull it up on YouTube itself and see what we've got here. All right. So I think that's why the market's a little bit more excited. I know the link's not in the chat, dude. Is YouTube taking away the links? Yeah, it's Chris. You got to WhatsApp it to me. The link's not in the chat. YouTube might be acting a little funny right now. Yeah, it might be YouTube. Okay, I'm gonna pull that up in a second. We'll go back to CNBC. We'll get a little update, and then we'll keep going from there. But I'll pull up the Bostic link in a second.
Off its market cap, pulled down other semiconductor names. The chip giant also taking a hit after reports that it received a subpoena from the Justice Department as part of an antitrust investigation. Dollar Tree, one of the biggest losers on the S&P this morning. Look at that, down 20%. The discount retailer missing earnings estimates, slashing its annual forecast as well, blaming a, quote, challenging macroeconomic environment. And then Supermicro, I mentioned.
Okay, we got Bostic. Here we go. He put out a full. Oh wow, he put out a full video. I didn't even know the Fed does this. He put out a YouTube video. All right, here we go. 1 minute and 37 seconds of Bostic making some statements right now.
Hello, I'm Raphael Bostic, President and CEO of the Federal Reserve Bank of Atlanta, and this year, a voting member of the group that sets the nation's monetary policy, the Federal Open Market Committee. As I record this message, the committee is preparing for a meeting that will be held less than a month after Federal Reserve Board Chair Jerome Powell declared that the time has come to adjust monetary policy. My views on this are in line with Chair Powell's. Now, to read about my current policy views in more detail, go to atlantafed.org, where you will find my new quarterly president's message. In that essay, I explain why my attention has shifted from focusing mainly on one side of the committee's dual mandate, the quest for price stability, to giving equal attention to the other half of the mandate, the pursuit of maximum employment. Now, to be clear, my staff and I are not claiming victory over inflation just yet. Indeed, there remains some distance between where inflation stands today and our 2% target. But the employment situation now warrants much closer scrutiny. Though not weak, labor markets are weakening, and there is a risk that this could accelerate. In coming months, we will continue working to fulfill both our price stability and maximum employment mandates, so that the outcome that has proven so elusive historically, wringing high inflation out of the economy without causing severe economic damage, stays within reach.
Okay, so Bostic said we're good, basically. I mean, kind of. He basically said, hey, we're definitely getting rate cuts. We're not done with inflation yet, but we're getting to the point where we're focusing on dealing with unemployment first, because inflation, he thinks, is going to be resolved. Is Nvidia green? Oh, wow. Nvidia is 14 cents from being green, folks. Nvidia is 14 cents from being green. So it looks like Bostic and the jobs data, the Jolts data, was not horrible. Market didn't love the Jolts data, but they pretty much loved what Bostic said. 7 cents away from going green, which is going to be nice to see for Nvidia at 107.89 right now. And if it goes green, maybe it continues green. And maybe we get into that uptrend. But it's going to have to fight to get there. Palantir right here at $30. So Palantir maintaining 30. Looks like the dip was 29.50, at least so far on the day. We'll see what happens over the next coming weeks. S&P basically is green. Robinhood 1926, that's green. CrowdStrike's down a little bit. Where's Zscaler? Zscaler still down 16%. Airbnb is down. Carnival Cruise is down. Starbucks is green. Interesting. Enovix got smacked yesterday. They're up 2% right now. Visa's up. MasterCard is up. DocuSign. By the way, remember I told you guys Steve was coming out with an article on DocuSign? I called him last night and I was like, hey, I told everyone you're coming out with an article. He's like, what do you mean coming out with an article? I was like, you told me you were coming out with an article. He's like, dude, the article's already out. I was like, what? You wrote the article in like 5 hours? So I'll put a Seeking Alpha in the chat, but if you want to read Steve's article, he's he somehow made the article already about DocuSign. So we'll go through that a little bit later this week. But if you want to look at it, you can look at it. Now, Steve does not have a position. Let me make that clear. Steve does not have a position in DocuSign. He's waiting until earnings. Earnings is on this Thursday. So no position in the company, but he's taking a look at it a little bit more. Okay, so DocuSign at 57, Apple at 218, Tesla 217, AMD 140, Nvidia, again, close to green, having a little bit of a red candle right there. Palantir is still green. QQQ, the NASDAQ as well. Basically, I mean, it's down 1/3%, but it was down almost 2%. And then you got Rocket Lab and everything else kind of settling out to be okay. It looks like the Jolts data wasn't that bad. AMD at 140. AMD at 140 as well. You guys just wait until the Fed real unemployment numbers come out. Fed is way too late. Look, I think the Fed is late on cutting as well. I don't disagree with that. However, the Bears are thinking we're going to have less than 100,000 jobs added in the month of August. I think they're just wrong on that, dude. Like, I do not think we're adding less than 100,000 jobs. I think if anything, we're adding 125,000, which is not horrible. 150,000 would be really good. 200,000 maybe is a little bit too much, even though I'd rather have more than little. But I don't. If we have 7.1 million job openings, again, it's It's a unique number. You can believe it. You cannot believe it. I don't think we've only added 150,000 jobs or 100,000 jobs. Remember, in July, we only added 114,000 because of the hurricane. That did have an effect, and the BLS even acknowledged that had an effect on overall job growth. So if you factor that out, you could have been closer to 125,000, which means if we just match that number this time, given the expectations are already so low, maybe the Fed doesn't care too much. I think the biggest concern is over the next couple months, if we can't continue adding 100 to 150,000 jobs a month, then we will see it in company earnings. Like Q3 earnings are going to be pretty scary just because every company that reports, I think the number one question they're going to get is, what do you think about the consumer? And if they put numbers up that are just not that good, and they blame it on the consumer, which some companies did it this cycle, Nike, Starbucks, Dollar General, even though Dollar General has a good argument. But if they start blaming them, that's bad. If they stop blaming like Lowe's and Home Depot and they take responsibility like Ulta Beauty and Lululemon, then I think we're going to be in a spot where rate cuts are actually helping the consumer, not hurting the consumer. Oh, Nvidia's like 2 cents away from going green. At 108, Nvidia officially is green on the day. At 108, Nvidia is officially green on the day. Oh, we hit 40,000? Oh, we did. We did hit 40,000. Okay, very cool. Awesome. Thank you guys in the chat. I'm just seeing your comments right now in the chat. Thank you guys. Means a lot. Appreciate it. Means so much. Thank you all for the congrats. 40,000 is awesome. Again, you guys know me. I'm not going to make a big deal out of it because this is a very cutthroat business. You got to work your ass off, and 40,000 is awesome. But the bar just has to keep being raised higher. So really, really appreciate everyone and the congrats, but just got to keep going. Just got to keep going now. And keep seeing where we can take it. Happy 40th birthday. Yes, exactly. That's my 40th birthday. Correct. Thank you, everybody. Really, really means a lot. Thank you. Thank you so much, guys. Thank you, Real Life Police. I think that you're new to the channel, but shout out to the Real Life Police who is thanking me. Thank you, guys. Appreciate it. Okay, so Nvidia at 107.72, down about a quarter right now. It's not going green. It's trying to go green, but it's getting held up every time it tries. SMCI still down 4%. S&P at 551. That's basically green. And then we got Palantir here at $30.17, which is not too bad. Bob the Builder says, I logged in and I heard Amit says he loves dicks. Yes, but then you missed the other part, which was sporting goods. Okay, there was 2 parts to that. GDP estimate revised lower. Okay, Chris, let me pull up this link that Chris sent me. GDP for Q3 revised down. It's revised to 2%. Okay, so Chris just sent me an update. GDP is revised down right now. So this is from the Atlanta Fed. The GDP now model estimate for real GDP growth in the third quarter of 2024 is 2% on September 3rd, down from 2.5% on August 30th. Okay. That is not affecting the markets negatively right now. That is something that I think people might have priced in because 2 to 2.5 based on this GDP now model. It's not perfect, right? After this morning's releases from the U.S. Census Bureau and the Institute of Supply Management, the nowcast for the third quarter real personal consumption expenditures growth and third quarter real gross private domestic growth decreased from 3.8% and negative 0.1%, respectively, to 3.3% and negative 0.6%. Interesting. So this got revised down from 2.5 to 2. So the actual number, this is not the actual number, this is the revision of the number. The actual number, I think, comes out in a few weeks. It comes out once every month. So I think it's closer to the end of the month. So we'll see what the number looks like at the end of the month. If we're still above 2%, that's good. If we go below 2%, that you could definitely say, GDP is struggling a little bit. So I guess we'll see how that number turns out later. But the market's not being, we covered the Jolts data. Yeah, the Jolts data was 7.6 million. The market's not reacting to that. You would think that's 0.5% down. You would imagine that has some impact on how the market thinks of overall growth. Either the market doesn't care or they haven't heard of it yet because nothing's affected. S&P is barely down. S&P is green. Bad news is good news again. Yeah, technically GDP going down is good for stopping inflation, but I think at this point, given we're seeing inflation's coming down in New Jersey. There was another place I went to yesterday in New Jersey where gas was $2. I thought it was a fluke. I saw one station at $2.93. I saw another one yesterday at $2.94. I was like, wow. So gas really is coming down conveniently right before the election. But yeah, I do think energy is coming down. Well, also the other reason, I know people want to say it's political and stuff, but OPEC is increasing production as well. So that's helping just overall supply, and that's helping lower prices, which is not a bad thing either. So yeah, it does seem like it's kind of a nothing burger, at least on that GDP report right now. What else do we have? So GDP came down. Jolts came down against expectations. Nvidia slightly green. Nvidia struggling to get that green. Right now it's down 0.5%. And Dollar Tree is down 23%. Dix is down 8%. So that's kind of the main stories we're having right now. And then Tesla, based on this new feature they put out on parking, it looks like that's what's taking them up about 3% right now. SP still negative on the day. Yeah, it's negative, but it's not as negative as we thought it was going to be. Your stream is always behind if I do something else with my phone while I'm listening. Appreciate you guys as well. Thank you all for the congratulations. Really means a lot. I know I'm not showing a lot of excitement here about 40,000, but honestly, it's just because I don't like to hype things up at all when it comes to numbers, because I think that's the quickest way to I think that's the quickest way to get complacent. So kind of my personal philosophy is just like, you just keep moving forward, and like internally I acknowledge it and it's awesome and I'm very appreciative of it, but I don't like to make a big deal of the numbers. I know some YouTubers, like, they make big videos when they hit into numbers, but like, I just, again, this is such a cutthroat world, dude. This is media at the end of the day. Like, succeeding in media is really fucking hard. Like just building any type of media brand is so difficult. So acknowledge the journey, but until you put 5-10 years in the game, I don't think you can really say you've quote unquote made it or anything like that, So that's what we got here. All right, let's go back to CNBC and then I'll get some other headlines and we'll keep going. From there. So let me pull this up right here. All right, here we go.
Got a downgrade today to equal weight at Barclays following too many negative catalysts, including the 10K, remember, filing delay. Price cut slashed over there to 438 from 693. The stock's down around 50% over the last 2 months.
Got a couple of macro prints a moment ago crossing the wires. Jolts comes in at 7.67 million. That is lighter than the estimates of 8.1 million, down from 8.2 million last month. And factory orders for July up 5. That is in line with estimates. That's going to be the lightest opening since January of 2021. And I know that's a number you like to watch.
Well, especially that $8 million openings mark on jobs, because back in April, we got below the 8 million, but since then it's kind of rebounded and hovered around that level. So we are now seeing more evidence that the labor market is cooling off. We're going to dive in just a little bit, look at some of the quit rates and hiring rates and show what's beneath the surface ahead of the jobs report on Friday. Let's talk Nvidia, though, because the stock is down again after plunging yesterday. The SMH, semiconductor ETF, also coming off its worst day since March 2020 and down again. Dom Shu is here with more color on the stocks and the fallout for semis and tech, Dom, and what the catalysts are.
The catalysts are that economic slowdown story, as you mentioned there as well. Also, this idea that there may just be this valuation concern really permeating through some of the artificial intelligence beneficiaries over the course of the last several quarters at this point. But if you take a look at the semiconductor ETF that you mentioned, the ticker SMH, the VanEck Vector Semiconductor ETF, we're down about 0.5%. It's modest compared to the drop that we saw yesterday, but we are now still hovering, you can see in this range, below the 50-day moving average and above the 200-day. The level that some traders are watching right now, we're hovering just above that 200-day, which currently sits at around $216 per share and change. So again, the VanEck Vector Semiconductor ETF, kind of indicative of the overall tech trade right now. It's been a leader in that move to the downside. And again, we're off roughly 20% from the highs that we saw just earlier this summer. So certainly something to keep a close eye on. You mentioned Nvidia itself, one of the biggest market cap decliners since the record highs that we saw this past summer. Nvidia shares down 1.5% again. And just to put it in context, we are now down significantly in terms of market cap. Since the peak that we saw this summer, Nvidia shares have lost some $765 billion approximately in market value. And that's more than the market value of Broadcom itself. So you can see Broadcom shares down about 0.75%. Advanced Micro trying to bounce back a little bit today, Qualcomm and Texas Instruments. These 5 stocks have represented some of the biggest point detractors from the large cap NASDAQ 100 ETF, so keep an eye on those. And then I just want to highlight Broadcom shares because we have earnings coming out tomorrow afternoon after the closing bell. Those shares are down 1% right now, still just below its 50-day average price on a rolling basis. And Carl, just to kind of give you an idea of the context, the options market right now is currently pricing in a plus or minus 6.5% move in Broadcom shares after earnings tomorrow. Over the last 8 quarters, Carl, that move has been plus or minus 5% on average, so a slightly more volatile earnings report expected by traders. I'll send things back over to you.
Okay, so we have, I agree with what he says on Broadcom and Nvidia. Obviously, Broadcom is going to be very important for Nvidia, and Nvidia is important for Broadcom. Both of them feed off each other. But folks, we just had the 10-year and the 2-year uninvert. I mean, now they're literally the same, but for a second they uninverted. So the 10-year give you, so I think they uninverted. So 2 years, 3.783. You get 3.783% for buying a 2-year. For the 10-year, okay, so this messed up my uninversion claim. You get 3.782. 2 seconds ago, it was like 3.785. So basically, they are at the same now. Yeah, now you have an uninversion. So 3.8784 for the 10-year. For the 2-year, 3.783. So you've got the full uninversion happening. Now, this has happened in the past a couple of times over the past couple of weeks for like a couple seconds, which is what's happening right now. Maybe this sustains itself. Maybe it goes back to being inverted. But one thing I think we can definitely say is that the inverted yield curve that people have been using for a while to judge on a recession, at least in 2023, it was not a good indicator. We still have to finish out 2024. But if we don't have a recession in 2024, that means the yield curve would have been inverted between the 10-year and the 2-year for 2 years straight with no technical recession being 2 quarters of negative GDP growth. So it's interesting. I mean, maybe that's an indicator that doesn't matter as much in the future, but we are seeing them uninvert a little bit, at least right now. On top of that as well, 30-year mortgage rates are out. The average contract interest rate for the 30-year fixed rate mortgage in the United States is now 6.43%, slightly lower by about 1 basis point on the week ended August 30th, 2024. It marks a 5th consecutive week of falling borrowing costs, staying below 7.3% a year ago, which is insane that mortgages were 7.3% a year ago. But still, the idea is the Fed will soon start cutting interest rates that push treasury yields lower. And that means that the 30-year fixed year should hopefully be coming lower as well. I mean, it's been a long time. If you look at the 5-year chart here, this is when I think a lot of people in the chat, definitely people that I know, my parents, obviously, they got their homes right around this time from 2020. You're talking about 3.4 all the way until 2021 at 3.2. This was really the golden time to lock in that 30-year fixed rate. And then it just started going up and up and up. And now it's like, I mean, in 2023, it was insane, right? Paying almost 8% for a mortgage. So one idea, and Chris talked about this yesterday on the market close, as the Fed lowers rates, hopefully that creates more supply. I know there's some argument. People say, well, if the Fed lowers rates, then there's going to be so much demand to buy these houses that it's only going to push up prices higher than the 40% that they're up right now over the past year. Yes, but it also might increase tons of supply because home builders and the cost of manufacturing, along with the Lowe's and the Home Depots of the world, where most people go to be able to shop for their housing supplies and their raw materials, etc. All of that might benefit S&P basically going green right now. And if that benefits Palantir at 3024, then that's obviously very good for the housing market, very good for housing prices, and very good for housing inflation, to not be as big of an impact as it was before. 107.23 on Nvidia. So we'll see if the Fed can keep lowering rates to get those mortgage rates to get more attractive, but we'll get more data on Friday if they do 25 or 50 bips. Mark says he got 2.49%. Wow. That's incredible, dude. You must have had a hell of a deal. Was that in 2020 or was that years ago? Because in 2020, even that 2.49 is pretty amazing. That's one of the best deals in decades on mortgages. So that is not bad. Apple's weak right now. Yeah, Apple's a little weak. Again, Apple was up yesterday based on the idea that the iPhone AI upgrade cycle is going to continue to happen. I think now a lot of people are getting a little skeptical of how many phones are they actually going to sell. It's kind of like the Vision Pro stuff. When they announced it, it was super hype, but then they ended up selling less than, I think, a couple 100,000 Vision Pros. I really hope that's not the same. I think for all of our portfolios, we need Apple to make AI real. One thing is, I was talking with Steve yesterday on the phone about the use case for Apple AI, and he brought up one use case that I thought was really interesting. What if I wanted to book a flight, I could ask Siri, hey, get me a flight on United Airlines, make it within the ranges of $350 and $450. Make sure you pay extra for me to bring a bag on the flight. Get me a window seat. Book it to go to Dallas, Fort Worth at 2 p.m. next Friday. And then because Apple has all of your credit card information, it has all your personal data, it has everything integrated in your phone, has your calendar, so it won't book it during a meeting, all that stuff. It just gets the job done, and then it emails you the itinerary, the United app updates, and then boom, you're good to go. I mean, that to me, I don't know if it's as convincing as a use case as I'm saying it to some of you guys, but when I think about that, I'm like, I think people would use that. And I think that would take away a lot of pain of just like booking a hotel or booking a flight or booking an Uber, for example. And that's where AI can become really integrated. Now, 2 caveats to this. Number one, is that the killer use case of Apple's AI? I don't know. Maybe it is, maybe it's not. B, is AI even good enough to do all of that? Because I think it's kind of good, but I don't know if it's good enough to book you a full flight autonomously on its own without no mistakes. But I think on that September 10th event, they really need to show use cases for AI, because that's the only way they're going to get people to buy 100 million new phones. But if they don't do that, I think it's going to be a little tough to get a lot more people to upgrade. And so I think that's what the street is kind of betting on right now. 2020, I got 2.65%. Wow. Some of you guys got way below 3%. My parents, I think, got 3.4. So you guys got good deals. 1.99 on a 15. That's incredible. 2.5 in 2012. That's incredible as well. Where's Tesla? Is Tesla getting some love? Tesla's still green. Wow. Tesla's outperforming. Nvidia is like literally 5 cents from going green. It hit 108.13. Every time it hits 108, it gets rejected. So Nvidia is very close to going green. Palantir is above 30. Robinhood's holding up at 1930. Tesla 5% up on the day. It seems like their new ASS thing is at least getting investors excited. I don't think there's any other news on Tesla for why it would be up. Dix is still down 7%. It was down a lot more. Dollar Tree was down 30 or 25%. Now it's down 17%. Zscaler is probably not down as much as it was before. Yeah, it was down 17.5. Now it's down 16. CrowdStrike's barely down. CrowdStrike was down 3%. Now it's down 0.77. Cruise lines are green on the day. IWM is up. TSM is up. SoFi. Wow, SoFi is green. SoFi's up 1.4. Snowflake is green. PayPal's green. Netflix is green. Meta's green. We're seeing some green come back into the market, even with some stocks still struggling a little bit. And Nvidia in a couple cents. Oh, there you go. There's Nvidia. There's green. There you go. Now you got some green. 108.9. There you go. There you go on Nvidia. Not bad. Not bad. We are getting real green on Nvidia now. There you go. There's a real sustained green candle. 108.3. Let me check the resistance on Nvidia on the order book flow. Let me take a look at that real quick. Robinhood just went green, 1940. QQQ just went green. S&P just went green. Dow Jones just went green. IWM just went green, folks. We just flipped green on the day. Interesting because the Jolts report wasn't amazing. GDP revision wasn't amazing. I think it was the Bostic comments. I think Bostic kind of calmed everyone down, and maybe the market had enough pain yesterday. Wow, Nvidia is now up 0.5%. The resistance on Nvidia at 109, there's 58,000 shares. So if it breaks 109, you have to have 58,000. The volume is 134 million, which I would imagine 50,000 shares is not that much. By the way, the volume yesterday on Nvidia was 447 million. The average volume is like 350 million. So yesterday was definitely a bigger day for Nvidia to deal with it. And Bank of Canada cut rates. Correct. I was about to say Bank of America again. Yes, Bank of Canada did cut rates as well. Dude, I feel like this is what September is going to be like. Now Nvidia is actually going green. I think September is going to be one day we are so back, and then one day, oh my God, I don't want to look at my portfolio. It's going to be like every other day in September. Unless the Friday jobs data is so damn good that we can kind of avoid a lot of pain. But I feel like September is going to be back and forth. We have the presidential debate on Tuesday next week, September 10th. By the way, Kamala Harris said she supports a $50,000 tax deduction for new small businesses. Last night after hours, she came up with this proposal, and she wants 25 million new small businesses in America in her first 4 years. Biden had 19 million. So she wants to up that by about 6 million. So we'll see how those proposals shake out during the debate. And then after the debate, 10 days later, we've got the FOMC meeting and hopefully a first rate cut. So a lot of stuff coming up down the pipe in September. Okay, let's based on talking about capital gains yesterday, we had a little who was on yesterday. Who did we watch? We watched the SEC commissioner give kind of the bear case for it. I don't know if Representative Ro Khanna is yes or no. He's from California. He is a Democrat, so maybe he's supporting it. But let's get his take on the politician perspective on the Democrat side for this. We got the SEC commissioner side who is a bit more bearish against it. So let's see what he has to say. And in 20 minutes, guys, I'll be live streaming the Palantir head of energy, Matt Babin. We'll be talking to him on Twitter Spaces with Arnie. So in about 20 minutes, I'll be live. And if you want to stay on stream for that, then we'll be able to listen to that as well.
Spend time talking about the idea of taxing investors on unrealized gains. Our next guest is looking at something we've also talked about quite a bit on this program, and Andrew's been talking about it for years. Bill Ackman recently talked about it with Jay Clayton, I think yesterday, the day before, and that's taxing loans related to the gains instead of trying to do it in a way that's probably not even possible to do. But Democratic Congressman Ro Khanna of California, his 17th district is located in the heart of Silicon Valley, and anybody that doesn't realize that that is a goose that lays golden eggs constantly for this country and for the world. He's joining us today. Well, it says in your capacity as a surrogate of the Harris-Walz campaign. I'm going to forget that. I'm going to say you're joining
Silicon Valley
as my and as my running mate. If we
bottom of the ticket, Joe Rowe.
No, Rojo. I want a cushy job where I don't have to do anything, but I can take credit for things. I want the.
We need you in the Midwest. Anyway,
you tweeted it out to me, unsolicited. I think last week. What about this idea? And we've talked about it. It bears, I think, some consideration and a conversation. I immediately hear from other conservatives, we don't need to raise taxes no matter what.
Right.
But there are founders of companies that start with nothing. They have $5 billion. They die and they pass it on to their heirs.
If you're using it as cash, it should be taxed.
It's never been taxed, ever. It's never been taxed.
But they're borrowing against it.
But they borrow against it, and the idea, and it's what you came up with.
Well, not my
why do you not want to do Kamala's idea? Well, or whoever came up with it. Why do you not want to do the Elizabeth Warren? Why do you not want to do that one?
Let me tell you why I don't think a blanket tax on unrealized gain is a good thing. I mean, let's say you're an entrepreneur. You create a company. It gets to 100 million or 200 million on paper. Now, if you're taxing that, you're probably going to force that person to sell it. They're probably going to sell it to private equity. Do you really want the entrepreneurs to be forced to sell their companies to larger institutions and to decline in value? I don't think that that's what you want for a startup ecosystem.
Unintended consequence. Jeff Bezos wouldn't have to do that. They're going after these very, I think the whole.
It looks like he's against unrealized capital gains from what I'm hearing. And that kind of makes sense given the guys in Silicon Valley and his constituents probably wouldn't be happy with unrealized gains.
Policy is demagoguing to go after these people that they say pay less of a tax rate than their maid does, and they have billions of dollars.
I get why, but this is not the right way to do it. And also 95% of investments in startups fail. And so you're going to disincentivize investments in those startups. But here's what I think we can go after. You have folks, okay, they start to have capital appreciation. And then instead of realizing that, they take out a loan, which I call backdoor realization, to fund their entire lifestyle. They never pay tax on that. Then when they die, they pass that money on to their heirs, and their kids never pay tax on that.
But let me ask you two questions. First of all, I think to make this actually work in practice, you actually also have to have the step up in basis at death. Otherwise, the entire effort doesn't really work because you need to change the incentive structure for why people would even want to take out these loans to begin with. Okay.
Totally agree.
There's a second piece to this, though, which is, and I actually was just on the phone with an entrepreneur in the Valley who I think everybody knows yesterday about this, who said, look, I understand what you're trying to do, Andrew, but if you do this way, it's going to disincentivize additional investment by entrepreneurs in the into either investing in their own companies or investing in other companies. So one of the things that a whole bunch of people who've made a lot of money do is they actually not only take out loans to fund their lifestyle, if you will, but they also take out the money to then make investments in other startups, in venture capital firms. By the way, venture capitalists and private equity folks often are taking loans against their own firms to look like they have carry in their funds. So their actual carry in their own funds is coming from a loan that they're getting from the fund. And so all of these folks are calling up everybody, including, by the way, the Harris team as well, because they're aware of this, because people are calling them saying, well, if you do it this way, you're going to actually be disincentivizing investments in small businesses, to bring it all back to today's conversation that Harris has now proposed. So what do you say to all of the pushback on that front?
Well, on your first point, it's absolutely correct on the step up of basis. And that basically means you start with $100, it grows to $1,000, you give it to your kids. The kids should have to pay the capital appreciation tax. The second point, look, for the easiest way is to tax luxury items and luxury items
as
purchases.
like a VAT.
As a VAT, or, if you're going on luxury things at hotels and planes, luxury purchases, that should be taxed.
Okay, so I think there's some fair points that he makes right there. I want to get your guys' perspective on this as well. Do you think that if people, Nvidia up 1%, Nvidia is really moving right now. Do you think if people have a lot of wealth and they take a loan against that wealth to basically never have to sell those assets to then eventually realize the capital gains there, do you think that should be regulated to some extent? So basically, let's say you start a company, it's worth 10 million, then it grows to 100 million. Let's say you own 100% of the company, you're up 90 million, and then you just constantly collateralize your lifestyle with that 90 million because the bank knows you're good for it. And then you never have to end up paying taxes on pretty much anything. Do you think that should be taxed? Which is, to me, a little bit better of a solution than taxing unrealized gain, like taxing the 90 million, but rather taxing the loans that you're taking against the 90 million. I think that's more reasonable. I think the Democrats and Republicans can probably come to the same conclusion on that. But I think the unrealized capital gains part, that's where you just piss off all the business people. And that's what gets in a tough situation. I know some people will still disagree with that, but I think more people will agree with it than disagree with it. Whereas unrealized gains, almost everyone who knows anything about business just hates that, or cares about entrepreneurship just hates that. Palantir right here at 30.50. So Palantir just went green. QQQ just went green. Nvidia just went green. Tesla's been green. Intel's still down. SMCI down 2%. SPY is green. Robinhood 1950, 1948, that's green. Rocket Lab 635, that's up 5%. Google at 157, that's green. Even Bitcoin participating. CleanSpark at $9. CrowdStrike at 265. Yeah, you're seeing some participation. Where's IWM? IWM is now green as well, up 0.5%. We got a bunch of libertarians in the chat. No taxes ever. The older I get, the more I wonder what the point of taxes are. But it's hard for me to be super anarchist. No. The thing about taxes is I benefited from tax. I went to public school my whole life, right? So like my education was funded by taxpayer dollars. My parents pay taxes. I pay taxes now. I just wish we had a little bit more insight into where our tax dollars go. That's it. If you told me my tax dollars were going to make sure that no one is homeless in the United States of America, I wouldn't mind paying more tax. If you said, hey, mate, we're going to charge you an extra 5% on your yearly taxes, but we will guarantee there will be no homeless people in America. Because it's not like we don't have the money to clean that up. I think it's a conscious decision that we're not trying to clean up the homeless problem. Then I would be like, all right, yeah, I don't think people should be homeless. I can forego another 5% of my money to make sure you can guarantee me. But the problem is, the money's going to everywhere but solving some of the more core issues, right? So I'm not anti-tax. I just wish we had more clarity on where the tax is going. And unfortunately, a lot of times it just ends up being used in egregious ways. But I do think the unrealized gain part, that's no one's, it's going to be really tough to get people to agree with that. It's just going to be tough to get people to agree. Amit is a communist now. Yes, exactly. I'm either MAGA to you guys or I'm a communist. It's one or the other. But that's good, right? That means there's some objectivity here. People have been asking who am I voting for the election. Let me just say I am voting. Okay. I'm not going to say who I'm voting for because at the end of the day, I'm just not disclosing that. But I am very proud for who I'm voting for. I will say that. I am very, very proud for the person that I will be voting for president of the United States. By the way, we'll be live. Chris, if you're in the chat, you're going to be live with me on election night, okay? You and me, we're going to cover this damn thing for 5 hours. Chris is going to be super political, give all of his raw takes. I'm just going to be listening to him, trying to be objective. Chris is going to have no filter. If Matt Money's here, we should get Matt on. We should get Carlos on. We should get TJ. We should get a bunch of people. We should have better coverage than CNN and Fox. And we're going to cover this election night on November 5th. And we're going to see who the hell wins. But yes, I will definitely be Sorry, I think it froze for just a second, the stream. Yeah, it froze for just. Could you hear me during that time? No, you couldn't hear me that. Okay, I blacked out for like 2 seconds. That was CrowdStrike, guys. That was CrowdStrike. That was something. That was probably. All right, we're back. We're good. Okay, in 10 minutes we are going to be streaming with Matt Babin, the head of energy of Palantir, on Twitter Spaces, and so we'll hear what he has to say. But until then, let's run through the last bit of headlines that we have. But yeah, we'll be live for the election night. We will definitely be live for the election night, and we will see what ends up happening. All right, Jolts data. We got some Jolts data coverage. Let's see what we got right here with that Jolts data coverage, and we'll keep going from there. Here we go.
Reach the mandatory retirement age of 65. Don't know when the Fed will get with the program that people are working longer and able to work longer. But anyway, mandatory retirement age 65, and Philly Fed now announcing a search committee for Harker's replacement, which is the normal course of action when these things happen. A little more on this Jolts, which the Fed is increasingly following. The market's also reacting more and more to it. There's a new measure that comes from today's Jolts that helps the Fed know whether labor markets are loose or tight, or how much of a threat inflation may be, and how to adjust policy. The measure of vacancies to the unemployed, or VU, takes the number of job openings from Jolts, divides it by the number of people looking for work from the household survey, a concept pioneered in the 1940s by British economist William Beveridge, the so-called father of labor economics. Let's see where it is right now after this morning's data. The ratio's come down. It was 2 in 2022, meaning there were 2 jobs open for every unemployed person, prompting employers to bid up wages to get workers. And now it's just 1.1 as of this morning's number, and the revision to last month down a tenth. It's a major reason why Fed Chair Jay Powell has expressed less concern about jobs causing inflation than more concern about a weakening labor market. A new paper, which came out at Jackson Hole by researchers Benigno and Egerton from Byrne and Brown universities, made a strong case for VU, explaining a lot of what happened during and after the pandemic. Take a look here. It helps explain, for example, the inflation surge, which researchers saw as mostly due to labor supply shortages. In fact, they show 5 of the past 6 inflation episodes going back 111 years came along with labor shortages.
You know, and the interesting thing there, again, we were talking about this last night. If most of the inflation we had in 2021 was based on, wow, Nvidia 109, labor shortage and supply chain problems, then that means the Fed is way too tight right now, dude. Because we don't have labor shortage. We have more than enough people that are willing to have a job. We have technically less jobs, right? That's kind of the core issue. And supply chains are great right now. Like, I mean, like you have plenty of raw goods and materials on the shelves. In fact, we saw the PMI data yesterday. People are paying a little bit more for some of that stuff, but like you're going to struggle to buy an iPad like you were in 2020 when everyone was buying an iPad. So if most of the supply chain inflation and the labor inflation is not as aggressive as it was back in 2021, which caused the 10% run up in CPI, then the Fed is way too tight, dude. The Fed is way too tight. And the Fed knows that. That's why Bostic came out with that YouTube video today. I don't even know Bostic puts out YouTube videos. He came out and he said, hey, we got to focus on maximum employment. And so rate cuts are on the way, folks. It's just a question of if we don't have a collapse in the jobs data to get there. So I think that the core 2 bear cases right now is unemployment is too high and AI is not real. I think both of those are solid bear cases. September 6th will tell us about if unemployment is real or not, like in terms of how bad it's getting or how light it may be in terms of unemployment going down from 4.3 to 4.2. And the AI not real part, I mentioned this with Jose. I've been doing a lot of research on startups that are raising a ton of money, because at the end of the day, the most important investment from AI is going to be coming, I think, from the VC funds that are investing aggressively in the next trillion, $100 billion companies, right? And if you don't have VC funds taking risks on AI bets, then you're not going to get the next Amazon, Meta, Google, et cetera. So this company right here, let me show you one of the companies I was looking at. This is a company that, you know, the more I look into some of these legit startups, the more I think, hey, wait a second, maybe AI is more real than what some of the bears may be thinking. So Cursor AI, they raised $60 million, and they are the best way to code with AI. I have not done a ton of research into this company, but you could argue that they're a supercharged version of GitHub Copilot. Again, I'm saying this in a very elementary, naive way because I have not done a ton of due diligence. But from the traction they've got, which is over 40,000 companies for a 2-year-old startup, I mean, it's pretty incredible. How do they make money? $20 a month. Very simple. You might get a lot of these SaaS businesses that just benefit from the AI momentum and they have their AI agents do what they need to do. As you can say right here, Wise and Cursor free. They write large language models cost quite a bit of money to run. To grow Cursor sustainably without compromising our service quality, we need to cover our costs. That money they're paying to Google, Amazon, and Microsoft to basically rent out GPUs and sustain the AI workloads on Azure, AWS, or GCP. And that's where Google, Amazon, and Microsoft make a lot of money. Now, the question is, you need a lot more of these companies like doing what Cursor is doing that are raising a crap ton of money, paying a shit ton of money to Google, Amazon, and Microsoft, because then that justifies Google, Microsoft, and Amazon spending all this money on NVIDIA. It's this cycle that needs to happen, that needs to make sense, that needs to be congruent. And as long as that continues, I think there's a better argument for why AI is more real, than what some people may think. But I'm doing a lot more research on that, and I'm going to bring up more companies over the next couple of weeks to take a look at that. So there you go. That's what we got right now. Sounds like people saying the internet was not real or a big deal. Yeah, and look, the internet ended up becoming something so real. I think it's still, the jury's out on if AI is going to be as real as what the internet, dude. Like, think of right now, there's 1,500 people on a phone or an iPad or a laptop or a computer that is connecting you guys to my content via the World Wide Web, because YouTube is a video streaming platform on this thing called the World Wide Web. Like in the 1990s and the early 2000s, none of this even made sense. And now it's like normal. Now YouTube has 2.4 billion people. Now when you want updates, you go to YouTube, you get information from Twitter. Like, it has fundamentally changed the architecture and the paradigm by which we access information. And I think that's the other thing here. If AI is going to be as transformative as the internet, it needs to literally transform how humans consume information and engage with information. And if that doesn't happen, then I think, yeah, you're going to have some hiccups. But if it does happen, then I think we're going to have a whole new paradigm. And Apple needs to make that shit happen, because they have all the consumers and they have the distribution to get that to be done. Okay, cool. So let's take one last look at the markets. I'll be starting that stream in about 3 minutes. So for those that don't want to listen to the Palantir Global Head of Energy Spaces discussion, this is pretty much the end of the market open. Thank you for being here. Thank you for everyone who congratulated on the 40,000 subscribers. It absolutely means the world to me. I'm sorry if I did not show a ton of excitement, but for me, it's just about continuing to work and grind. But I appreciate it deeply from the bottom of my heart. Everyone showing up every single day, spending time with me, putting their, I get a ton of messages every day of people that are enjoying the stream. So it truly means the absolute world. And there's not one day I go by where I'm not grateful for any of this happening. And yeah, that's it for the market open. For those that want to stay, we'll be live for the next basically hour. And then after that stream, I'll probably be live for like another 20 minutes because I want to see what happens in the markets by like 11 a.m., 12 a.m. or 12 p.m. And so we'll be live till probably like 12:20 today, 12:15-ish, and then we'll be done for the market open. So if you're staying for the next hour, get some food. It's almost lunchtime, right? It's 11 a.m. Who eats lunch at 11 a.m.? And put in the chat what you're eating for lunch. If you're staying here and you're eating lunch, let me know what you eat lunch. Guys, I've been thinking of doing a 3-day fast. I kind of want to do a 3-day fast, dude. I've been watching some videos on it. I kind of want to challenge myself to do a 3-day fast. I could start today, dude. I haven't eaten anything today. I know it's very spontaneous. I know it's very just like heat of the moment. I know it's very compulsory. Like, I'm very compulsive with some of this stuff, but I watched some videos last night. I was like, you know what? I think I could go 72 hours without food, just water. And so I'll let you know by the end of the day if I've completed the first day of this 72-hour fast. But I really want to do it. There were so many health benefits people were talking about. Like, you know what? I'm going to clean out my system. I want to see if I can do it. All right, 109.20 on Nvidia right here, up 1%. I'm going to now start the Twitter Spaces. Where's Palantir? Palantir's at $30.49. QQQ is up 0.2. AMD's up 4%. SMCI is down 4%. S&P is now green. Robin at 1948. Palantir 30.50, and then Nvidia going green on the day at 109.14. All right, let's start this Twitter Spaces. We'll do word of the day at the very end. Or should we do word of the day right now? Because some people are leaving. Should we do word of the day? Okay, we'll do word of the day right now, and then we'll do the Twitter Spaces. So word of the day is feckless.
Feckless.
Ineffective, incompetent, or futile. I feel like if you called someone ineffective in corporate America, you know, like in corporate, I'm sure you guys deal with it where you have to send emails and you have to be very professional. If you called someone feckless and you were trying to say that the work they did was ineffective, it's basically like saying fuck you. Like feckless to me sounds like an intellectual way of calling someone mediocre. And in corporate America, I think that's a diss, bro. Like if I'm in corporate America and I get an email by my superior and they're like, "Hey, this was really feckless work a bit," I'd be like, "You know what? You know what? You know what? I'm not going to do anything because Nvidia just fell 10%, so I need this job." So that's what a lot of people probably were dealing with yesterday. That's what a lot of people were probably dealing with yesterday. All right, let me start this Twitter Spaces. It is live on Twitter. We're going to have everyone join in a bit and see what people say and see how this plays out. I know there are some interesting moments in corporate America where like, you know, if you end the paragraph with a period, or if you, what's that one? It's like we'll talk about this. There's some specific saying that people use in corporate America that in the emails that lets you know that the person's trying to diss you. I'm trying to remember what it is, but there's a certain way that you say it. All right, everyone's joining, so we'll just give them a second. I'm trying to remember that sentence, dude. I saw a meme about this. Put a pin on it. Oh, per my last email. Correct. Daniel got it. Per my last email, which means, motherfucker, you did not listen to what I was saying. That's not what feckless means. It means lacking initiative, strength, or character. Okay, on dictionary.com, it says ineffective. So I guess you can take it the next direction as well. But if anyone said that in corporate America, I feel like that would definitely be a diss, bro. That would definitely be a diss. Okay, so let me add these people as speakers. Invite to speak, Iliano. Chad, invite to speak. And then Arnie should be joining in a second. All right. Hello, everybody. We are going to get started in just a couple of minutes on this new Twitter Spaces. Thank you, everybody, for being here. We're going to be talking all things energy with Matt Babin, who is the head of Palantir Energy. And we're going to get his insights, his thoughts, his experiences working at the company for the past decade, and how he thinks of energy. With me, I have Chad, who you guys all know pretty well. We have Arnie, who I'm sure you guys all definitely know. And we have Iliano, the man who has brought the merch store back to the community. He is here as well. And so they'll be with me for the next hour to better get an understanding of what's going on with Palantir Energy. So we'll be starting in just a couple minutes. So sit tight, and we'll be starting in just about 2-3 minutes. All right, cool. So that's muted. So now you guys can hear me, but the chat can't hear me. And once Matt joins, we will officially get started. Yeah, this is the behind the scenes POV, basically the behind the scenes POV. Okay, let me text Iliano to let me know when Matt is in. Let me know when Matt is in, so I can add him. Ileana's like, why is it quiet right now? I'm like, dude, because no one's talking. That's why. We're going to wait. Unless we want to do small talk. Can I talk? Yes, you can. Yes. Okay, he said just small talk. All right, guys, we're doing small talk. All right, so Matt should be joining in just a little bit, but before we get started, we're going to preview a little bit of what we should expect in the spaces. Iliano, you can get us started.
Thanks, man. First of all, let's make sure Matt knows how to get in here. All right. Yeah, I mean, Matt's cool. I'll leave it at that. I don't want to spoil it. Started in that USG business, now runs the energy side of the commercial house. So let me just get him the link here. Give me 1 second.
Okay. Chad, I have a question for you. You took a couple of days off Twitter. Now you've graciously joined us back for this Spaces. How did it feel having a social media detox? Okay, you guys can't hear him.
I can't hear Chad.
I can't hear Chad either. Chad, I thought that was just me. Chad, we can't hear you. You might have to leave and rejoin. Yeah, probably leave. Yeah, no one can hear you, Chad. See,
Man.
you know, Elon pays $44 billion, and these problems still exist, but it is what it is.
An architect at Palantir can't figure out the audio.
Dude, it's probably not his fault. It's definitely it's this stupid app.
No. I think it's Chad's fault. All right.
Oh, there he is. I see Matt. All right, I'll let him on stage, and I think we should get started.
There he is.
All right, Matt, you are live. You can unmute yourself so we can see if we can hear you, and then we're good to go.
This will be the only thing that I've managed to get work that Chad can't get to work if this works.
I love it. Okay, you're good. We can hear you. We're good to go. All right, folks. So we're going to start right now. Matt, thank you so much for joining and taking the time with us to talk about your life and career and everything you've done at Palantir in the energy business. We really, really appreciate it, especially as the retail community, to get a better and deeper insight from someone who's at the company. And it's nice to talk to you again since I talked to you at AIPCon just a couple months ago.
Awesome. Yeah. Thanks for having me, setting this up. I don't know what we call it when it's a virtual space like this, but yeah, I'm, for a long time I had a career where you couldn't talk about anything, and then a long time at Palantir where no one cared about us. So it's great to talk about what we do to people who care about what we do, because I care about it a lot. So.
Well, people definitely care about what you do, and there's a lot of people now that really, really care about what you guys do. So I guess let's get started with this. How did you get your career path in corporate America to ultimately lead you into Palantir? And then we'll keep going from there.
Yeah. So I think it's a good question. When I interview candidates who come here, which maybe I shouldn't talk about this publicly, but I'm going to say it anyway. Like the first thing I always ask them is, your resume tells me what you did and when, but it doesn't tell me why. And I think the why of someone's path is the most interesting part. And there's always degrees of randomness, and mine certainly has that too. So I went to college out in California. I stayed there for grad school. I got recruited out of grad school from a professor who was on sabbatical from the CIA. So that's sort of a story in and of itself, which we can get into a bit. So I worked for about 5 years at the agency, focusing on Iraq. This was in the early 2000s, mid 2000s. So it was a kind of interesting time to do that. At the same time, I had friends from university that I had, through random occurrence played ultimate frisbee with, who were some of the really early employees at Palantir. And so they were out in DC. And so every time I came back from overseas, I'd link up with them and get a beer, and I'd say, like, what are you guys doing? And they'd say, like, oh, actually, it's funny you ask. Why don't we show you the software? And I'd look at it and I'd be like, oh, that looks awesome. This is what I thought I'd have to do my job. But it would be better if it had this, or how would you do something like this? Or what about this type of data? And I thought they just thought I was smart and interesting, but they kept taking all these notes. And then they'd leave, and then I'd see them again in a couple of months, and they'd show me a new version, and it would have all of those things. And then I was like, well, what about this and that? And then they, basically said, well, why don't you come do this? Like, why don't you come work with us and do this there? And I said, well, what would I do? And to their credit, they said, we don't know, but we'll figure it out. And so I thought about it a lot because I loved my work at the agency. I loved the mission. I really, really loved the team. I feel very, very grateful for the time I had there. It was, I think it's the most important type of work that someone can do is in the national security or defense space. And so for me to leave, it had to be for a place that I cared as much about as I cared about that job and that mission. At the time, so I said, okay, I'll come out to California and I'll meet the team. Every candidate, no matter if you were a referral, if you were a targeted hire, you interviewed with the founders. And the more of the team, my first interview was with Sham, which for those of you who've either met him or heard him speak is a kind of daunting way to start your morning after a cross-country flight, just with all these questions.
Were you nervous on that one?
Well, luckily I didn't know enough about the company to know how nervous I should be. Because my friend from college was just like, oh, here, you should, talk to my boss. And I was like, okay, great. And we talked about him as a person and the work he was doing, and then it was just straight into the questions. After the fact, I was nervous, and then the last interview was with Karp, because everyone interviewed with Karp. And the more I met the team, I was just like, this group is so passionate about the problems they're solving. Like, this is the only team I've ever met that I feel has the same focus as the building I'm in, at Langley. And you know, the allure of software for me was I could keep doing my job at the agency and I could get better and better every year. And that only makes a difference to the particular mission sets or problems to which I'm assigned. If you build a software platform so that everyone who has a job, like I had in every country that supports sort of Western ideals, that has just such a bigger impact on the world. Like, that's the beauty of software, I think, is scaled impact when it's pointed at the right problems. And so that convinced me on the mission side. The people convinced me on, we spend a lot of time working. If you don't like the people you work with or the community you spend time with, I think that's you're sort of cheating yourself. And it was small at the time. It was around 120, 130 people. And I just had this gnawing feel that, like, if I don't do this now, I will regret it for the rest of my life. Not saying it'll be wildly successful. My friend was very blunt with me. He's like, this will probably fail, but you're going to meet really, really smart people. And I thought, if it does do that, then, government agencies stick around. Yeah, they have hiring freezes and it's harder to get back in the door, but like, that world of intelligence and national security will still be there. And this opportunity might not. And I can't live the rest of my life thinking, like, could I have done something there that mattered? So that was fall of 2008. And then I joined in spring of 2009.
I love it. So it was it was an existential moment for you, ultimately, kind of a do or die. I need to take this risk. I'm going to, see what I can do with these crazy guys in Silicon Valley. But if it works out, it might be one of the greatest journeys of my life.
Yeah. And I was like, it'll either work and we'll do amazing things, or I'm going to meet amazing people who will do other amazing things. And I think, one of the, Ted has talked about this a lot, who runs sort of the commercial book globally. If you hire really, really smart entrepreneurial people, they're going to leave and start their own things.
Yep.
Like, both of those friends who referred me have left and have gone on to start new things. And that's something that we really embrace. Like, obviously, I want to keep everyone great that we have, but you can't, you have to look at that as a success.
So real quick, before we get into the energy stuff, let me just ask you this one last question on your journey. You said the people who recruited you left. Why haven't you left yet?
Yeah, it's funny. That's the question I get from candidates usually after I'm finished asking them questions. I spend some time thinking about this every holiday, where there's sort of like some downtime. I'm sorry, by which I mean every like winter holiday season. The three things that matter most to me are: do I still feel passionate about the mission that we solve? And I think, like, given that I was in that space before, I feel, I don't want to say more deeply, but as deeply as anyone else in our building about that. And from having done the work in the roles where I know we deploy our software into now, like, I can't see myself walking away from that mission unless it's to do something else in that mission space. And so that dramatically narrows down your window of things that you would even consider leaving for. The second is then, like, the caliber of people remains outstanding. And that's a thing I really, really care about. And then the third one is just like, we're still so incomplete in terms of what I think we can do. And so, the same feeling that I had in 2008 of, if I don't take this opportunity, I'll always wonder what it could have been like. Like, when I look at the stuff we're building now that we haven't even deployed yet, like, I still have that same sense of, like, I can't even consider not being a part of pushing this out to the fleet in the future. And so, every winter I think of, like, are those three things the same? Like, do I still think we're supporting missions that really matter? Do I still think extremely highly of everyone I work with? And do I still think that, like, we're tackling really, really hard work that's not done yet? As long as the answer is yes to all three of those, then I don't know why I'd leave.
Yeah, I would echo that. Can you hear me a bit now?
Yes, you're good. You're good.
You got me to install X back on my phone, man.
Dude, we need you back. You can't take that many days off, man.
I I agree totally with what Matt's saying here as far as like the mission and the stuff that we see that we're deploying out and the impact that it has. I think for me, it's being able to see on the front line like impact of something that you help build on the real world in people's lives, whether it's like power safety, power shutoff and helping save lives, or through energy, or lots of different things. Like that impact is what still gets me excited. Like the software's cool, but unless you're actually doing things that matter, then who cares? And so for me, it's the combination of those things that's so valuable that like gets me excited, right? And it's not just I built cool software and we made some money with it.
Hey, Matt. This is Eliano. I don't know if you know who I am. I walk by your desk sometimes. So it's really nice to finally get to talk to you. I'm joking, of course, but
he says this like I even have a regular desk.
That is true. That is true. You are kind of like, you just kind of pop up, but it's great. It's always great to see you. But Matt, I have a question. So you started in 2009 and, it's kind of hard for me. I started 3 years ago. So it's kind of hard for me because when I came to Palantir, it was a publicly traded company. It had, in the eyes of those in Silicon Valley, like it had made it. It had crossed the valley of death. It had made it. It had become a success story. And obviously, like we all believe that we're still in our infancy. But back in 2009, that wasn't a guarantee. Was there a moment for you, whether it was like in 2013 or something, like what was the moment in from your vantage point where you're like, okay, we've made it. Like this is really going to happen.
It definitely wasn't in 2013. But I'm trying to I guess I would say it wasn't one moment along the way. There were lots of little moments where it's like, oh, okay, like we crossed that. Like I don't actually see it. I know everyone we used to give books to people. I think we still do. Like when you showed up for your first day, you got a stack of books that we think were important. There's a mission component, like everyone gets Looming Tower by Lawrence Wright, which I still think is one of the best books out there in the CT space. And you got that book, Crossing the Chasm. I view it more like there's hundreds or thousands of chasms. And so there were little indicators along the way in lots of different ways. But I don't think I could point to like one moment where it's like, this is, it's easy sailing from here, because just the things we do are hard. And so it's just like, I also think internally, we are always paying attention to the things that aren't as good as we want them to be. Like there's never a conversation you're going to have with a Palantir engineer, which is like, the product is done. Look at everything it does. Like internally, all the focus is on like, how can we make this better? How could this go faster? What about this other thing? So there were little indications. It's like, I still remember the first time I saw an ad in the DC Metro, in the DC subway system for us. I was like, whoa, this is on the metro station and people are looking at it. Or the first time I heard someone talk about us just in a passing conversation on the street. So there were like little things like that, but not one big thing.
Yeah, I think this is really important, Matt, because a lot of us here obviously deeply care about the company. Some people have invested in the company, and getting to hear from someone at the company on why they're continuing to stay, and how they got through those dog days. And now as the company is reaching more success, why they continue to feel that's better than starting their own thing. That's really important for us, because at the end of the day, a lot of people that are investing in Palantir are investing into people. And if they believe in Palantir, you have to believe in the people themselves, people like you. So it really means a lot to get some of that insight. I want to transition to energy itself. So kind of a broad question here. You can take it where you want, and then we'll get more into it. But some people here in these spaces probably doesn't even know exactly what Palantir does. They know it's in data. They know it's in analytics. They know they kind of do stuff with the government. Maybe they do stuff with supply chains and healthcare and all that stuff. So it's a two-part question. A, what does Palantir really do when it comes to the energy markets? When people think of energy, think of oil, renewables, etc. And then B, why do you think Palantir's approach with energy and data is differentiated from a lot of the other software companies?
Sure. Good questions. So just in the 30-second version for the people who don't have the background that you or others do, we build software. We build software with a singular goal in mind, I think, which is to help people who do important things, whether those are government missions or commercial enterprises, make I don't want to say better decisions because that's a judgment word, but make the best decisions you can in the circumstances you're in. And I mean that very specifically, and we'll get into that more in a bit. To do that well, you need a platform. And again, Chad, I think, has expounded way more than I ever could on this in public forums on, you connect to underlying systems of data. So that data is going to be multimodal. In oil and gas, that means, millions of sensors per second, complex subsurface models and unstructured texts, and then crappy, scanned diagrams of wells. So it's all that gamut from structured to unstructured. You're going to connect to systems of logic. In energy, those look like, physics-based models and first principle models and mass balance models and financial models and price projections and market demand. And then you're connecting to systems of action. So, CRM, SAP systems, procurement systems, work orders, safety inspections, government regulations on safety critical industries and things like that. Above that integration engine is the ontology. We've talked a lot about that, right? The nouns and verbs of your business. And then above that, you have the application layer, right? Where people are actually using the software, clicking buttons that write back through that ontology to those underlying systems to do things. Why I think this is so important in energy is that, and again, every human is biased, but maybe I'm particularly biased coming out of the Intel space, is energy is a lot like intelligence, which maybe sounds ludicrous at the beginning. But if you look at them as two domains where they are extremely data dense, right? Like imagine the national security space, pick your favorite 3-letter agency. They're collecting all sorts of different information of different types from different sources of different validities. Those all go into systems where you have PhD level experts in their field combing through them to find like the smallest different variations and put those into an analytic perspective of the way, a human, a different organization works or thinks. Oil and gas is just like that. It's just different domains. It's different nouns and verbs, right? But that's the same as, looking at a reservoir of hydrocarbons 20,000 feet below the surface of the earth, a petroleum engineer looking at that reservoir over time, a base management engineer looking at the way that well is operating, and a exploration engineer thinking of what the well schematic, what the well should look like that they drill next. And they all have different tools to look at different parts of that job. But Intel organization doesn't want 8 different answers to should we kick down this door or not, right? Yes, there's trade-offs of, hey, it'll expose this source. We're not totally sure who's behind that door. We're going to put people at risk if we do this operation. But they want all of that data going in to make a decision and do a thing. And in oil and gas, that's the same, right? Are we going to spend money for this lease block? Are we going to drill this well? Are we thinking of the energy transition and decarbonization way? In both cases, you have literally dozens of different job functions who all have one particular view of not even a side of that cube, but like an individual square on that Rubik's Cube. And the organization is trying to come up with a way of evaluating those trade-offs and make decisions at pace. And this isn't one decision. This is, an organization like BP has around, 3,000 wells around the world. So you're making thousands of decisions every single day. And so where these things are so closely tied for us and where I think we're a good fit for this space is you don't just care about the decision you're making, you care about how that decision changes the future decisions or the knock-on effects of that decision on all of the other parts of your organization. So yes, I can kick down this door, but that means I probably can't use this source anymore because it's going to be clear that this information only came from one place and it was that source. Or yes, I can pull more oil out of this well. I can open the choke on this well, but that's going to decline my reservoir pressure over time, which means I'm going to have to inject more gas or water, which means I'm going to have to pay more in life of maintenance activities over this one thing. So that's where they're the same for us. And so I think to answer your final question of like, why are we uniquely suited in this space? One is you need one pane of glass where you can pivot back and forth between if I do X, what happens to Y? So not just is this an optimal decision, but what does this do for everything else that I'm doing that's interrelated to this? So that's part of it. You need it in a way that is auditable, right? Energy is a really, really regulated space. If you look at sort of, healthcare, energy, heavy manufacturing for things that have safety parameters like cars and planes. Those are all the industries we're most involved in. In each of those, you need to be able to show your work, right? Like my son's learning long division right now. And it's, why did you come up with this answer? What part of this is a model? What part of this is an algorithm? Where does the line between data and analysis stop and start? And how does that feedback loop continue in an auditable way? And then in both of these industries, you have way more things to do every day than people to do them, right? Like when I was at the agency, there was never a day where I was like, well, I'm done. We've solved this problem and I can go home and not think about work. And so how do you use technology in a way that augments your best humans? These are places where humans will never be replaced, I would say, but you need more capacity and you need to leverage AI where you can to give your humans more space to think about the parts that are really, really complicated.
Yeah, I think you bring up a good point though too. It's in the real world, whether it's in intelligence or in the commercial space, the ideal state of what you planned on rarely is actually what happens. And so it really comes back down to execution of in the moment, at the edge, on the ground, how do I make the best decision with the information I have? And I think that's the focus, whether it's energy or like I like to say hydrocarbons are very similar to chickens. Like it doesn't matter the industry. Every one of them has a plan, and that plan in the real world, the ground truth is usually different, deviates, things happen. And that's where our software meets the real world is like, how do we then execute against the real world, not the plan? And I think that no matter what industry is like that universal thread.
Hey, Matt, thank you for this overview. And you mentioned many use cases within the energy sector, but I wonder how everything started in the energy sector. Was there a main client that unlocked future cases? How it happened?
Yeah, so this is something that we certainly don't talk that much about, but we started with BP. I'm actually in London today. We started with them back in 2013. Bob Dudley, who was the CEO of BP at the time, who I think is a tremendous leader, he spoke about this publicly about a year and a half ago at CERAWeek. There's a video of actually he and Dr. Karp giving a sort of fireside chat there where Bob talks about the work. And what I think Bob was visionary in a way of saying, my company has unique, these are his words from that talk, unique problems. He jokes that BP at the time stood for big problems, which I didn't know until he said that there. I need to do things differently to sort of be in the position I want to be in compared to my peers. And that means I need to use technology in a new and different way. And he came to us with two specific problems. One which he references in that talk, and I'll let you go and look at his video to get into on sort of the risk side, and then one on the hydrocarbon production side. And so we started with just one specific problem, which was, hey, in all of our regions, let's start in the North Sea. We do what's called a well review. So, once or twice a year, every asset team does a review of every well. And you can think of this as sort of like you're taking your car into the mechanic for a checkup. How is it working? Is it working the way we thought it would? And this was a process that took, a couple of weeks of collecting data. You're going to put that all in a slide deck. You're going to prepare a presentation. And by the time you're in the room talking about that presentation, the data you're looking at is already out of date, right? And so the immediate problem was, could you make that faster? And so we said, yeah, let us start. We started over a weekend, and we got that down to where you could do that 2-week process in basically a day. Then we got it to where you could just do that in real time all the time, right? Like the screen you're looking at is that well review, but it's in real time all the time, right? How is my asset performing right now? How does that compare to, my model and my projection? What opportunities do I have? So like all big things, it started with one particular problem in one particular place. The other thing that was visionary about Bob was he said, I'm not going to push this from the top. Karp and Bob actually joke in that session about, if you have an engineering-led culture, just try to tell technical people how they should do their job. And the half-life of that is about, 10 seconds. It's like the door, you stop reading the email, the door closes, and then you're like, cool, I'm going to do my job the way I wanted to before. So Bob was adamant that it was on us to prove that the software was valuable. He said, I'm going to give you the introduction to people who own problems. I'm going to, unlock data for you to have access to, but I'm not going to tell people they have to use your software. That's on you to prove your way. And so we rolled that out to every operating region they had, and then that sort of just, compounding on the ontology that was built out led to more and more work on production optimization and on drilling and a whole bunch of other things. What's really unique about this was that the arrangement we had was exclusive with BP for the better part of a decade. So the agreement we signed with them was we can't do anything else in the field of oil and gas. We did a lot of work in renewables. We did work in wind and solar and hydro. We got into utilities as we built up our commercial business, but it was exclusive in the field of oil and gas up until 2020. So
Matt, I'm curious. Internally in the company, when you were exclusive on one client for oil and gas, was that kind of annoying to be exclusive with one company and not being able to venture out, or do you guys think that gave you so much time to get the R&D necessary to work with BP to prove real results that in the future you could scale to other clients?
Yeah, I mean, it's a good question. In hindsight, it's frustrating, but at the time, this is a world. Maybe this is another thing to note. This was before Foundry existed. So we were using, Palantir Gotham as a backend and then building our own custom software on the top of it for how to stream fiber optic data from 10,000 feet below the surface of the earth, which was definitely not what the Gotham backend was designed for, to be clear. So I think at the time we were really focused on, maybe in general, one of the principles we have here is like, it's hard to do, the more things you say you're going to do, it's hard to do them all well, right? When we hire people, we don't want to turn people into like well-rounded game players. We want people to be the best at the position on the field. The best thing we could do was really deliver the most value for BP as a partner. We're certainly in a place now where with the product, we can do a lot more at a lot more places. And you've seen that in the growth of this vertical since then. But at the time, I don't think we could have done we couldn't have solved the depth and complexity of the problems we're solving there at the pace we were solving them with the global reach we had at more than one place. So I think it was advantageous for both players.
From your words, it seems that BP and the early commercial clients played a big role in actually building a foundry, because as you mentioned, in the initial stages, you are using the Gotham essentially. So what was very difficult to build in that stage that required so much time?
Yeah. If you look at the heavy lifting that Foundry does as sort of if you look at let's call it sort of like the back end from ontology, what we call south, right, was where what took us so long to build custom software on top of Gotham was that we didn't have the sort of like that monocle view and ontology layer that we get in Foundry, right? And so we had an ontology in Gotham. We had data stores in Gotham, but Gotham was designed with one front end and application. If you've seen, and we're talking about an older version of Gotham here too. So what was interesting in energy was you go to, if you take, for example, 3 different regions, right? The Gulf of Mexico, those are large offshore platforms. In Oman, that's the Kazan field is the tight gas field that's much more like U.S. onshore, right? And then Alaska, which they still own, they sold it in the intervening period to Hilcorp. There you have onshore wells, maybe a dozen or two going to one facility. So each of those operating regions think of things very differently, right? This would be like going to the FBI, the CIA, and then a local police department and saying, like, you're all chasing bad guys. So you all think of this in the same way. It's like, no, they don't, right? They have different ways of running investigations. They have different ways of thinking about the world. And so everyone wanted to see a very, very custom front end. And so Gotham gave us tremendous leverage on the ontology objects and the back end data security and lineage and all those first principles, but it didn't do anything for us on that custom front end software, right? And so Foundry at first was sort of, there was 2 things. One, it was the flexible like data pipelines that we were using as a data pipelining tool to readily get that secure ontology view into build a flexible framework on top of this to build those front end applications ourselves.
Sorry, if I just have another follow-up question since you touched many points. I'm studying software, and I'm seeing that software essentially has two layers. Or you are an horizontal software, very wide, or you are a vertical software, very specific to certain use cases in a certain sector. But from your words, it seems Palantir can actually do both sides. So how should we think of Palantir being an horizontal software, a vertical software, maybe both?
Yeah, I think it is both. And I think, we talk all the time internally about being like an and company. And we like to call out where we think people are forced to make these trade-offs that are false. I think the first one was in the US context, right? Sort of the driving force behind the founding of the company was you shouldn't have to choose between counterterrorism and national security and data protection and privacy. And at the time that we came out and were sort of forceful about that in 2003, 4, or 5, that was sort of an alien perspective. It was like, well, you're either with us or against us, right? And it's like, well, no, you can want both of these things. You can want your civil liberties protected, and you can want, you to be safe while those are being protected.
You're either with us or against us, right? And it's like, well, no, you can want both of these things. You can want your civil liberties protected, and you can
platform on which people can build their own software, but it should also be flexible enough to then be bespoke and configurable for work that really, really matters. Right? You shouldn't, if you go around and look at sort of like how many different workflows people use software for that it was not designed to do. I know it's recorded, so I'm not going to call things out by name, but everyone can think of these things
if you go around and look at sort of like
wow, this was
how many different workflows people use
again, if we go back
software for that it was not designed to do, and I know this is recorded, so I'm not going to call things out by name, but everyone can think of these things in your either personal or professional life where you're like, wow, this was definitely not designed for this purpose. Again, if we go back to what we've designed the software to do, it's like we've designed this software to help people in complicated worlds make decisions. That's a horizontal problem, but the decisions they have to make are vertically specific, right? So you have to have that flexibility of looking at a nonconformity of an avionics harness as you're building a plane is different than monitoring a pipeline for fugitive emissions. Both things really matter, and so I would say it's both.
Matt, can you give us some insight on AIP and energy? I mean, we know AIP is really starting to take off. The bootcamp stuff starts to take off as well. I would imagine that energy clients or potential energy clients would want to see the benefits of actually using the software for a couple of days before they sign a deal. So any insights on how AIP has been implemented from the bootcamp perspective to lead to energy being more important and the actual application of AI into the energy workflows?
Yeah, we've done, I don't want to say more than our share, but tons of boot camps. We've done sort of every different flavor of them. Some of these have been on site with customers with their own data, which are really fun. We've done ones with notional data when people want to see the platform first before opening that up. We've done quite a few that have been multi-company together, which are really interesting. Again, I think energy is sort of unique in that, yes, these companies compete with each other, but they're also each other's customers and suppliers. And so we've had some really interesting sessions where people have engaged not just on problems they want to solve, but on problems they want to sort of co-solve with people in their value chain. One of the things when we look about value chain inside of a company is, okay, well, how do you influence the world of decisions before or after your decision? You can think of that crossing not just business unit lines in a company, but also beyond that company as well. These are particularly interesting in energy, I think, because so much institutional and tribal knowledge in the energy space lives in things that are just so hard to work with day to day, right? They're really old schematics. They're on plotter paper. They're images, but they're images of really, really technical data. And in all of those cases, AIP chained to a vision model is really, really powerful. But again, let's go back to, these are all really, really heavily regulated industries, and they're places with engineers, right? So the chain of thought and the, how do you give AIP access to different models and different logic engines is what has really driven the most growth in the energy space. Because there is no petroleum engineer anywhere who is going to say, in response to why are you changing the operating conditions of that well? Because the model told me to, right? Like, that is the fastest way to get on the next helicopter off the platform. It's like, no one will trust you ever again. But hey, I've done a review of operating conditions, and I've looked at all of our past performance, and I've asked the model to alert me when we're getting close to similar operating conditions where we thought we had these opportunities, and that's high graded for me while I'm sleeping, and then I'm taking action on those. That's a thing that people will definitely do. And especially when they get to leverage all of this data that's just sort of been sitting around for a really long time.
Hey, Matt, quick question. So as you're kind of going out there and experiencing, different clients and seeing different use cases and doing different AIP boot camps, without really going into like specific details about customers, clients, and conversations, is there like a use case example that's AIP related that you think is super cool, that people that would resonate with the listeners, like something that you're excited about that maybe you weren't thinking about 7-8 years ago, but that is now actually possible with AIP?
That's a good question. There's some things. The first one that pops to my mind is something that's not exciting, but maybe people will understand that the application of it is exciting. Which is, look, I love this job. I love my old job. In every job, you have certain things that you don't love to do, right? Like, one of mine right now is approving expense reports. I wish that I didn't have to spend time doing that. I understand why I do, and that's a different conversation. In energy and oil and gas, one of the things that people have to do is do maintenance work. And there's a very specific procedure for how you do maintenance work. And that varies company by company. But a key part of that work is, validating, was this work done according to the manual? And imagine the different operating conditions that people are doing this work in, right? You're in an F-350 in the middle of the Permian Basin. You're doing something, you're tapping screens on an iPad, right? Or you're on a facility in the North Sea. It's 12 degrees Celsius and sleeting rain. You're not carrying around the manual for that thing with you, right? But this is where AIP can really, really benefit, someone who's in this position and working. We've done this as a boot camp work, which is, that piece of kit on that, well riser or compressor or flow line, that's mapped to an ontology object. That object is referenced in a manual. That manual is ingested into Foundry. And so it's very easy for someone to just say, like, great, I've done this work order. That work order is then routed in a sort of like action inbox that's mapped back to that manual. You're validating those steps. And that work is done, right? The important work there is the human doing the maintenance. The important regulatory and organizational work is validating that work was done correctly, and there's a chain of thought to all of that. And that's work that used to take a really long time, in addition to doing the technical work, right? And so what I'm most happy about there is you're enabling people who want to deliver more output, to do more maintenance activity, to do more of that without compromising anything on standard operating procedures, on safety, on any of those sort of cultural and like value oriented things that matter. But the throughput goes through the roof, right? So reading manuals is not sexy or exciting. I think when people think about like AIP, they're not like, oh, maintenance manuals. That's what I'm going to see at the next AIP con. But as far as like the number of people who do that type of work, it's very, very large in the space. So that's one. Then there's another one, and we were able to talk about this publicly a couple of weeks ago with Kinder Morgan, which is on really complex operations, right? So a maintenance activity might be individually complex, but at scale, that's a bounded workflow. But pipeline companies have a really unique challenge with maintenance activity writ large, right? Because the federal government mandates that you have to do inspections of key infrastructure on a periodic basis. You have to do your own maintenance activities. You might have to stop operations because someone's digging up a highway in Houston and your pipe happens to be under that highway, or someone's building a new subdivision somewhere and that used to be in the middle of nowhere, but there's pipes that run under there. And you have to provide a certain amount of quantity to all of your customers, especially in a regulated industry. And so what we're doing with Outage Manager in AIP is enabling them to look at all of those things at the same time. What that means for the market, what that means for prices in the market, what that means for staffing of individual activity, what that means for your government regulation and oversight, and enable you to be much more proactive in managing that space rather than reactive, which can be a real crunch then as you're getting to the end of one of those reporting windows. So, those are two very different things, but those are two that recently we're seeing a lot of interest in.
Mhm. Well, energy is a legacy sector, but legacy doesn't mean that it doesn't require software. Actually, quite the opposite. And I wonder, by the conversation with your colleagues, have you noticed some peculiarity into how energy clients react to this way of AI?
Yeah, that's a good question. I agree with you. I think, energy as an industry has been around for hundreds of years. We could go back to other forms before hydrocarbons. And I think actually it's been it is a fountain of technological innovation. Right? Just a lot of that has been hardware rather than software. But even on the software side, before everyone moved to cloud, it was energy companies that were really investing, not exclusively, but they were doing a lot of the investing in high performance computing centers, right? In the ability to run these massive reservoir models and things like that. So what's interesting to me to see is, and what I'm really excited about from our perspective on a platform side, is a lot of these energy companies, it's a highly technical workforce. It's made up of engineers. For honestly decades, they have built their own versions of things or versions of models on top of software that they were using, but not because the software was designed to do that, because they had to do that to do their work in some cases. And I think the investment we've put into particularly AIP, even more than Foundry, on being a platform for other developers is going to be really, really exciting in this space. And if you look at a place where, again, we're not trying to do everything for everyone, we're not trying to build our own physics-based model. But if I'm a base manager or I'm a production enhancement engineer and I've configured and tuned physics-based models forever, and now I have a way of building my own choreography engine between different models with AIP assist to operating conditions, that's a really, really exciting space. So what I'm most excited for in this space on sort of the current view of the market is how many of these technical engineers are going to be able to move so quickly building their own versions of software for their own particular problems on top of the software that we're deploying into their spaces.
Hey, Matt, Leon again. So kind of want to shift a little bit. I think want to kind of go back to you, and then I think the gents have some other questions that are a little bit lighter topics. But I kind of want to go back to your background. So can you tell us about how you started off as a forward deployed engineer in the national security space, and then how on earth did you end up on energy?
Yeah. So I joined spring of 2009. And at the time there was you couldn't go right back and work at the agency if you'd been a former employee there. So I had to have this cooling off period before I could go work on our projects there, even though what I had done was in no way related to building software or anything like that. So at the time, it was a little frustrating. What was great was that I got to see sort of the landscape of everything else we were doing in the federal government at the time. So I worked on some of our first pilots with the FBI, which took me to a bunch of random field office locations, similar to the way we started with BP. Arnie, to your previous question, we worked at on individual problems in individual field offices because that was the most important problem in each of those cases, and it was 4 different places with 4 different things that we did. Then I worked on some of our DoD work. I got to spend a great I'd say maybe 12 hours doing an upgrade in the middle of the country at an underground facility, where I went underground and everything was fine. And I came back up and my crappy rental car was under about 8 inches of snow. And so I come out in like jeans, t-shirt, and a Palantir track jacket with no ice scraper in the car, nothing. I grew up in Colorado. I think it's probably the most embarrassed my dad would ever be of me, is that like I was in that part of the country without appropriate stuff for that type of weather. So I distinctly remember like scraping off the windshield of that car with my credit card, my personal credit card at the time, because we didn't have corporate credit cards. And then eventually sort of came back, the cooling off period was over, and then ran our national security book of work. The way that I ended up going from there to energy was like most things here, a little bit random. Carpet had that meeting with Dudley. We had started doing some of the pilot activity, and he was in DC of a day, and he comes by. He's like, "What are you working on?" And I walk him through things we're doing, and he said, "Okay, well, I have a different idea." And he explained to me the work that we were starting, and he said, "I wanted to get started off in a certain way. Can you help start it? I just want you to do this for 6 months." 6 months, and then you can go back to what you're doing. And so that was the deal at the time. I guess he still has that sort of like, I guess it'd be a put option on me to send me back to that part of the business, but I just never went back. The work was so exciting and growing so fast that I just stayed on the commercial side of the house. And actually, this is something I tell people internally, is like, if you have a clearance, or you can get a clearance, if you start on the commercial side, or if you start on the gov side, everyone who works here should see both sides of our business. Like, I do think it makes us very unique in the space. And it's hard to really, I think it's hard to understand us as a company if you don't understand what we do on both sides of the fence. And I think some of that is on us to talk more about what we do on both sides. Obviously, there's some things we can't talk about, but it's a critical part of who we are. And so I think everyone who's here should try it.
Mm-hmm. You spent almost 15 years with the company, so you had plenty of interactions both with Sham, Carp, and I really wonder, what's your favorite Carp interaction in these years?
This is recorded, so he would make a joke that I can't tell the good stories when it's recorded. But there's a lot. I mean, like, the other reason I would say I stay here is like, yeah, I have the privilege of being in proximity to them, and they're two people I think I learn from the most all the time. Like, every time I interact with them, particularly because they both think very differently than I do, which takes a while to get used to. You have to learn that like feedback doesn't mean you're stupid. It just means someone's thinking about something differently. I think there was an interesting time, a couple things jumped to mind with Carp. I am most impressed with his passion for the people who are here. I know he's passionate about what we do as a company and the mission, but like, I was with him today for about half an hour, but he didn't want to meet in his office. He wanted to just walk around the office, and just interact with other people along the way. He's like, there's gonna be new people who we've hired since the last time I was here, and I want to go like see them and meet them, and things like that. And then I think Sham, more than anyone else, makes me be more aggressive with how I think things can be done. So like you'll present to Sham a plan, and it's like, hey, I think we could do this in this amount of time. He's like, I'll give you half that much time, right? And if you keep telling me you need more, then it's going to be a quarter. And so you learn pretty quickly, like, don't keep arguing, like, just go do the thing. Yeah, I don't know that I can give you anything juicy, but I'll think of what I can share later.
So Matt, you are the head of energy at Palantir. So I have a very specific question for you. I'm going to ask the question, then I'm going to give an answer, and then I need you to confirm or deny if the answer is the right answer. So my question is, what gives you the energy in the morning to wake up and be the head of energy? And then my answer, which I'm curious if it's yes or no, Is it this? Is it the Palantir Energy of drink? Is it Celsius? Are you on that bandwagon as well?
I'm not on the Celsius wagon yet. I like most people here, I'm a little particular about some things. I try very hard if I'm not traveling to not have caffeine before 11 in the morning. I usually wake up between 5 and 6. And I try to hold off on caffeine until 10 or 11. And then I like caffeine load from 10 or 11 until 1. But I like coffee too much to give up my caffeine allocation from coffee for Celsius. So far. Although I did have one last week. Yeah.
Okay, so just going deeper on that, I guess the broader question here is, and you kind of answered it already in the beginning, but I mean, what gives you the energy to keep working every morning here? I mean, I know you said you can't think of any better opportunities or better just world experiences that you can get, but is there something that unique about the culture that we keep hearing about for why you continue to work at Palantir?
Yeah, I mean, the maybe glib but accurate response is like when everyone around you is working this hard, you have to like if you actually feel like someone's teammate, it's like, well, you have to work your hardest too, right? Like if I can't expect that from other people if I don't do the same or more. I think that like if you're just a team oriented person, that's part of it. I think the other one is in energy in particular, right? Like, yeah, I've been here 15 years, but we've been out of exclusivity with BP for 4 years. So we haven't been doing this that long, right? I mean, we have a lot of things left to do in that space. And if I look at this space, this is a space that is really has some like tough things to tackle. I mean, the world needs more energy. The world needs more energy just for like raising living standards around the world. There's tons of questions now about like if you look at sort of energy demand from hyperscalers and model builders and data centers, like that's a whole different sort of ball of wax on where is that energy going to come from? What does that look like in a sustainable way? What is next in the energy transition? And so I think like the problems we're solving are really sticky but fascinating, and we're in a really unique position that we get to see these from every different side, right? So on that one, like we're talking to people who build models and software. We're talking to utilities who care about the stability of their grid in a time of enhanced fire risk. We're talking to producers who are supplying energy to power plants. We're talking to the EPCs. By talking, I mean like we work with these companies, right? Who build those power plants on a variety of fuels or inputs. And so when I think of like what are the things that matter for the world that my son or his kids will live in, those are the problems we're touching right now. And so you can either say like those are too hard and I don't want to solve them, or you can say like better get to doing. And I'm in the latter camp.
Hey, Matt, you kind of touched on this just right now. Given everything that's happening geopolitically, and how energy is just such a critical part of the global economy, why do you think, in your opinion, Palantir is more important than ever before? Like, how are they intertwined, and where does software kind of come in? Whether it's thinking of new places to get rare earth minerals, you can't go to China or Russia, and especially as we start thinking about a world that's decoupling, how do you see Palantir really being a forcing function for the West winning?
Yeah. One of the things I think that's interesting is like we've I think I forget who asked this earlier, but it was like, what's changed over those 15 years? Like what's interesting to me is, yeah, we've built new products along the way, but our mission and our principles have not changed at all. I really liked, there's a piece of the New York Times article about Karp a couple weeks ago that said, you might not like his principles, but he's very principled. And we've been outspoken about our principles from the very beginning. And we've said countries and industries we don't work in or will never work with. And, two of those ones are ones that are very large energy producers and consumers. And the one that isn't a big producer, it does a lot on petrochemicals and things like that. So I think for us, it's quite clear to say like these are who we'll work with, and this is what we won't do. What's interesting to me is, I think if we go back in time, what, 2.5 years ago to the Russian invasion of Ukraine, which was sort of, I think, when Europe on a much broader scale looked at like, oh, wait, like where does our energy come from, and what might this mean for energy prices, and countries that they're sort of like banking on cheap energy for heavy industrial manufacturing, and so I think, you know, to your question of like where do we fall in sort of a force for people who are working in that world is you can, I guess maybe a different way of saying this is like, I think the world has been this complicated and this complex for a really long time. I just think more and more people are realizing it. And I don't know if that's through, you know, technology or awareness or what, but everyone's sort of catching up to what I think a lot of us in this organization have felt for a long time. And I think sort of what is going to determine the next 1 or 2 or years or decades is how quickly do companies move to embrace that sort of paranoia or way of operating, right? I think, like, you know, Sham talks a lot about M-Day was yesterday, right? Meaning like you're wasting time if you're still talking about what you're going to do in the future. You need to be doing it now, and so that's, I think, a very, you know, the people we see moving fastest are the ones who've embraced that idea.
All right, Matt, this was really awesome. All of us enjoyed it. I know there's a lot of people on the spaces. We got a bunch of people as I'm streaming here on YouTube as well that appreciated your insights, and a lot of people are going to listen to this after it's recorded. We have one final question for you, and this is going to be a really important answer that you give, because Ileano has no choice but to make this happen. So give us something good, because we know it's going to get done. What is one piece of merch that you want to see back on the Palantir merch store?
I really like hoodies. I think hoodies are sort of an all-purpose piece of clothing. Like if it's warm, you can wear them with shorts. If it's cold, you can wear them with pants. It's what I put up when I don't want to talk to someone on a plane, or I don't want to, like, headphones. Headphones do a little bit of that, but like a hood really does that. Of just like, no, I'm not for small talk. So I want some hoodies.
You know what?
There we go.
Not only are we bringing the hoodies in a few weeks, Matt, I am going to put one in a beautiful black box and place it on. I'm gonna place it on your desk, and wherever that desk may be. And then hopefully then you'll know who I am, and I can chat you from time to time. But anyways, Matt, I really want to just thank you. I think you know, you've got such an awesome Palantir story, and you know, it's not every day we get to talk to a Palantir OG. So really, really appreciate your time, and hopefully we can do this again.
Cool. Well, thanks everybody for coming. You know, I there's a bunch of questions here. I'll try to respond to people directly. And if you have, you know, Eliana said I have to use X for more than just remembering that the Washington Nationals were good at baseball in 2019 now. So you can get to me there. Yeah.
Yeah, thank you, Matt. Everyone here, please make sure to follow Matt as well on stage. Hopefully we can get him to talk more and engage more on X. But we really appreciate it. It means a lot. We know you're a really busy person, and this is the least of what you're worried about. So it means a lot for you taking an hour. So thank you so much, Matt.
Great. Thank you, guys.
Thank you.
Thank you, Matt.
See you all.
All right, everyone. Thanks for joining. This was Talking All Things Energy with Matt Babin, the head of Palantir Energy. Really appreciate Ileano and Chad for getting this set up. And we'll see you guys next time. Thank you, everybody. Have a good one. Boom. We're done. All right. There we go. Okay, cool. That was pretty cool. That was not bad at all. That was fun. Let me know if you guys enjoyed it. Let me adjust the mic. We got Noto on CNBC. So we're going to take a look at the markets, but let's check out Noto. I did not know he was talking on CNBC. Let's see what he has to say, and then we'll dissect everything else. Here's Noto on CNBC.
About the health of the consumer and investing trends. Let's ask one of the biggest players in the fintech space, SoFi CEO Anthony Noto. Welcome back, Anthony. It's good to have you. What are you seeing on the delinquency front?
Well, Sarah, thank you for having me, and I appreciate coming on there. In terms of consumer activity more broadly, and then I'll talk specifically about the credit card business, consumer activity and sentiment is trending okay. And I think as long as the Federal Reserve cuts rates 25 to 50 basis points, that trend will continue. A couple of data points that we're seeing that should be instructive for the audience is what's going on with the SoFi member. Again, a SoFi member is a higher income member, higher credit, but it is indicative of some part of the market. We're seeing debit spend continue to be very strong. It was strong in Q2 and continues to be strong in Q3. But importantly, that debit spend is not coming at the expense of deposit growth, which also remains strong. The second data point I would share with you is in our invest business. We saw about 50% growth in net flows in Q2 in our assets in our invest business, with a lot of interest in alternative assets, which we launched at the beginning of the year, but diversified investments like ETFs and robo. And we're seeing strong net flow growth again in Q3 as well. And then on credit cards, to your specific question, our portfolio is quite small. It's growing nicely. We are seeing improving entry rates into delinquency. We cited in Q2 that we saw a 20% improvement in entry rates into delinquency compared to 2023. And we're seeing continued credit performance trends in line with expectations in Q3 in credit cards, as well as personal loans, which is a good outlook.
Victor, thank you for the 10 gifted memberships. Really appreciate that, bro. Thank you for the 10 gifted memberships from Spain with love. Victor, were you live once? I think I sent the link like a couple months ago, and I think you hopped on live. I might be someone from Spain hopped on. It might not have been you, but I really appreciate it, Victor. Thank you so much. Thank you for the congrats on the 40,000 subscribers. If you guys want to get a membership, you can just grab it from that 10 gifted membership. You were live, right? I knew it. You're from Spain. I can never forget. I love it, man. Thank you, bro. Really appreciate it. Thank you so much.
So when you see the market throw a big fit like we saw yesterday on worries that maybe they're not pricing the recession as much as, say, the bond market, what do you think? It doesn't sound like you're seeing any kind of big red flags.
Well, I'd say two things. One, we do have a higher income customer, and they also are higher in credit, so they're not going to be fully representative of the broader market. A subprime customer would be experiencing different trends, and even middle America would be experiencing different trends. But I do believe what we're seeing is a piece of the puzzle. If we don't see Fed action of 25 to 50 basis point cuts, then the concerns on the macroeconomic front will become a reality, and we will go into a recession. But I think the Fed understands the importance of the cuts that are coming. I hope they move with 50 basis points. It gives them more optionality. It'll be more impactful to corporate America, and it will definitely be more impactful for the consumer.
Okay, so Noto is kind of making the case here that the Fed's got to fucking cut, because if they don't, SoFi's down the drain. But he seems pretty confident. He seems pretty adamant, and he's also kind of like, yeah, our debit spend's been going up. People have been engaging with the platform. So now if they get the rate cuts, I think they increase the guidance, and then I think then SoFi's good to go for the rest of the year if we avoid a recession.
And I think waiting to move that amount could be taking more risk than is necessary, given where unemployment is trending and given where we're seeing things like Jolts report today.
Hey, Anthony, it's Carl. This week, the Journal did a piece on Americans and how good, the Journal argues, they're feeling about their 401ks. We've seen the number of $1 million 401ks at Fidelity. I wonder how you think your consumer is thinking about their equity gains and how reliant they are on this so-called wealth effect. What would happen, for example, if we had a severe correction?
Yeah, so far, we're not experiencing spending due to a wealth effect. We're seeing spending based on income. Debit spending and deposit trends are the first indication of that. If asset growth slows, then we'll, in fact, start to see some risk in debit spending and deposit growth. But right now, asset flows have continued to grow as people have gotten good returns, both in their 401k and their discretionary investing as well. So think of it as a ladder effect. First, net flows will slow and go negative, and then you'll see a decline in deposit growth and then a decline in spending. And right now, we're actually seeing an improvement in net flows, improvement in deposits, as well as spending.
Oh, that means he says more people are depositing money. That's good.
And have you seen any early indications that homeowners with a lot of equity, and there are a bunch of them, are interested in tapping that if they need to in the next year or two?
Yes, absolutely. The day that we had the yen carry trade disruption in the marketplace, where we saw rates drop significantly, we saw a doubling in our mortgage locks per day. Now, our mortgage business isn't huge, and that trend wiped away the next day when rates went back up. But it is indicative of the amount of pent-up demand that is out there for home equity loans as well as refinancing. The amount of increased demand that we saw in that one day is a clear indication that people are waiting for the opportunity to refinance their homes. They're also waiting for the opportunity to refinance their student loans. We saw increased demand a couple of days there as well on the back of that yen carry disruption. So I do think if there's a 25 to 50 basis point cut in rates, it'll be very beneficial to those that need to refinance, for those that have equity in their home and can take some equity out at a lower cost. And then Don't forget the people that have bought their homes with ARMs that will be adjusting each year. And so a 50 basis point or 75 basis point cut going into 2025 could be really beneficial to the individual consumer. The other thing I don't think gets talked about enough is what are corporations thinking right now? What are they doing right now? Well, they're doing 2025 planning. They're thinking about their hiring plans for 25, their technology spending plans for 25. If they could lower their interest expense by 75 basis points with that amount of rate cuts between here and next year, they're going to go in more optimistic on spending, which will help our economy and hopefully help unemployment as well.
I just wanted to ask you about student loans because it's part of your business as well, and it's this political football. Right. Can you just tell us where we stand in terms of student loan forgiveness and expectations by borrowers of student loan forgiveness and how that might change after the election?
Sure. First, just for the viewers, the company was built on the back of student loan refinancing, but now it's a very small part of our business. And in fact, in Q2, lending overall fell to only 55% of our revenue, where tech platform and financial services increased to 45%. And we expect by the end of the year to be 50-50 revenue split. So it's a much smaller piece, but it is a big opportunity for us. If rates do get cut and there is some clarity on the student loan reform, which I think there continues to be, there will be a lot of demand for refinancing student loans. I don't believe the president's desire to forgive student loans outside of those areas where people have been harmed or misled will be successful. The Supreme Court has ruled. Other politicians are firmly against it. It's unconstitutional for the executive office to make a decision as it relates to student loan relief, and it would have to go through that congressional process, and there's just not support for it. I think right now consumers are being confused by the rhetoric that's really about the election and getting more votes. But as rates come down, they should refinance if they can save money because there's no frictional cost to refinance their student loans. There's no fees and there's no prepayment penalties. But they need to be very cautious about any belief in student loan reform and making sure it's very clear and it's certain before they make decisions.
All right. We know where you stand.
We didn't even talk any football, Anthony. But we will.
Thank you, Sarah and Carl. I appreciate it.
Why does Noto seem super chill, bro? Noto feels like he's got a quarter where they beat on the top and the bottom line. I mean, there was no hesitation. There was no weakness in his voice. He was answering every question graciously. He was putting in a little oomph into the answers, kind of explaining why it's so important that they're transitioning and navigating away from the previous elements of what the business was like a couple of years ago. And then he was very firm on the rate cuts and said, hey, like, we know the Fed's going to cut. It's time for them to aggressively cut. Bitcoin right here up about 3% on the day. Where's SoFi? SoFi up about 1.26%. It was down 4%, or sorry, it was down 2% in the morning. It was down 4% yesterday. I liked it. It makes me feel more confident for the SoFi options I'm holding. I'm in the money on those. I'm hoping SoFi gets closer to $9-10 end of the year on the rate cut news. If we avoid a recession, I think that's possible. And I think SoFi shareholders will do well towards the end of the year if that can play out. Again, when you see a CEO talking with that much confidence, Palantir, by the way, at 3060, Nvidia just went red again, but Nvidia was green for the majority of the day, basically flat right now, which is not too bad. When you see a CEO talking with that much confidence, it kind of makes you feel like, A, they're having a good quarter. B, they're not afraid of some massive geopolitical / macroeconomic event happening that would get them off their game. And I don't know, maybe I'm reading a little bit too much into it, but from that, I haven't seen Noto that confident in a while, dude, just talking really normally. So I liked it. I think that's good. I think everything he said about the rate cuts are bullish for SoFi. And again, SoFi, it's about that Q4 guidance. They can raise that sucker probably by a couple, I would say at least tens of millions, if not a couple $100 million. For the full year 2025 outlook, and then tens of millions for the quarter in Q4 if they get the rate cut and if they know they're getting 50 bips, because they're just going to be able to do what a firm is doing, which is approving more people to get loans, which means they can make more money. A firm right here down 2%, but it was down 40% last week. So I think that's good for SoFi, and it seems like they're hopefully going to be pretty confident. Amit, you said that before Zucks was happy on earnings and then it tanked. Well, that's the problem with trying to read a CEO before earnings. Zucks looked really happy, dude. He was on a fucking, he was like surfing and his face was white, or he had suntan lotion, or he had no shirt on. Like, I was like, there's no way this dude is going to crap the quarter. And by the way, the only reason the stock went down was because of CapEx. They had a phenomenal quarter. That was Q1. The reason the stock fell to $395 was because Facebook's like, hey, we're going to spend $15 billion a quarter on Nvidia. And the street was like, no, you're not. And Facebook's like, yes, we are. And the street was like, we're just not going to buy your stock. And Facebook was like, we're going to keep spending. And then the street ended up buying their stock because they realized, hey, like if they don't pay the Nvidia tax, then they're not going to win. So that was actually a really good dip. But yeah, you never know. You never know what CEOs are like before they report. But for someone who's been critical of Noto like myself in some of these TV interviews where I just don't think he has the energy, this one had plenty of energy. And so I thought it was pretty good. Okay, cool. So that's what we got in the context of Noto. Victor says Noto is going to kill it in Q3, but only for comparison quarter over quarter, but booming. Yeah, I agree. I think the Q3 earnings or the Q3 comparison should be strong quarter over quarter. And hopefully that's enough in the short term for the price to be able to do what it needs to do. All right. In terms of the rest of the market, guys, we've got a little bit of a market recovery. Palantir here at 30.66. Bitcoin up 3%. Really nice to see. Bitcoin was at 55,000 yesterday. Bitcoin now at 58,000. DIX is still down 7%. That's okay. Dollar Tree is down 20%. Again, that's specific to Dollar Tree. AMD is up 3%. Intel's down 2.5%. SMCI down 4.5%. S&P basically flat. What is concerning to me, Robinhood is green, which is nice. What is concerning to me, looking at a little bit more data on these Jolts numbers. Yeah, the Jolts numbers are starting to get a bit scarier in terms of the revisions. So again, if you missed the Jolts data at 10 a.m., we got new numbers, but those openings were revised, right? So last month, Jolts showed us 8.184 million jobs, which was a beat on estimates. It was revised today to 7.9 million, which is a miss technically by 100,000. That's still a miss, but now it's a month later, so no one cares. And this is kind of how, the current administration has been operating in terms of revisions. Now, look, my perspective on this is this is not good. I'm not a fan of it. I don't like it. I would rather have accurate data. But at the end of the day, if the market is going to judge based on these headline readings, if the market is not fully disagreed with the sanctity of these readings, then you can only do what the market reacts to with these readings. If you totally hate these readings and you think they're all full of crap, then you should go 100% cash, right? Because you just can't. If this determines the market and you're afraid that all of this is fake, then you can't be in the market. If you agree part of it is fake, which I agree, the revisions are not nice to see, but it is what it is, then you have to position yourself based on how the market reacts to it. And so far, the market really didn't care about that Jolts data, just like they didn't care about the BLS 818,000 job revision last week. And they probably didn't care as well about the fact that there was a beat on the consensus, because if the consensus was revised from last month, then technically it was a smaller beat or a smaller miss on the consensus today at 10 a.m. when the Jolts numbers came out. So the market's not interpreting necessarily as a bad thing. Tesla's up 4%. Nvidia, great recovery today. At one point, it was $109.99. It was almost at 103 this morning. So the fact that it's holding green, we got 214 million shares of volume. People are coming in to buy the dip. If it stays at this level for the next couple of weeks, I don't think that's the worst thing in the world. The question is now if it continues to get momentum to the upside, or if you get buyers that step in on this, or sellers on this DOJ lawsuit thing, and they sell it off. It doesn't seem like the DOJ lawsuit is that big of a deal. We had Jose step on, and he said after going through the lawsuit, it seems like the DOJ is just mad that Nvidia is winning too much. Not necessarily that they've done things that are anti-competitive. But we'll find out as the investigation goes on if they actually did things that were anti-competitive. My perspective, again, is the same thing I said in the morning. If they did some things that are kind of anti-competitive, that's not a reason to prosecute them, because you kind of got to break a little bit of rules to get to the point where you are in this world, and every tech company does it. So you're not going to get rid of every single tech company. But if they did something egregious, then yeah, we should know about that. If they really set up something in 2010 or 2019 that allowed no other competition, or whatever they did outside of things that are in the boundaries of the law, aka intellectual property and patents, which is what I think they did, because that's where Nvidia's moat comes from to get this level of success, then we should know about that. If that didn't happen, or if it's literally insignificant in the broader scheme of things, then I think the DOJ is just trying to get a parking ticket here. And so we'll see how this plays out over the next couple months. Amit, why is the market up? Just got off a 2-hour work meeting. I think the market's rebounding from yesterday. I don't think it's any macroeconomic data. I don't think it's the mortgage data. I don't think it's the Jolts data. I don't think it's any company earnings. I think it's literally the market had a rough day yesterday, fell 3%. Nvidia fell 10%. People are buying a little bit of the dip. Market's rebalancing right now. I am, it is nice to see the market do well today, but I wouldn't trust it until Friday. Friday is when we're going to know what direction the market wants to go. Also, one reason the market's up is Bostic. If you missed it, he came out, he put out a YouTube video. He said the focus should be on employment over inflation, even if inflation is not fully battled yet. and that we should not be too tight for too long. Basically what he said at Jackson Hole 2 weeks ago. So I think that's why the market liked some of his comments, and that's why the market's up. But none of this matters, including Nvidia earnings, including the subpoena by the DOJ, including the Jolts number, until we get the jobs report on Friday. And so Friday, 8:30 a.m., I'll be live at 8:20. That's when we're going to see what ends up happening. S&P slightly red. Again, we are slightly red on the S&P, but we are not, 3-4% down like we were yesterday. And I think that's what everyone is happy about, that it's not as aggressive as it was yesterday. QQQ basically is flat. I mean, it's down 28 cents, 0.06%. Really not seeing the type of pain we saw yesterday during the day. Now, we still have, 3-4 hours left, so we'll see how things play out. But so far, not necessarily the worst. Bitcoin, 58,000, Palantir 3059, Nvidia 108, SoFi 763, Tesla 219, Robinhood slightly red right here, 1933, Palantir 3061, Nvidia 108.34 on the day. And then you got the S&P at 551.29 right now. All right, Celsius 52-week low. Wow. Yeah, Celsius just been getting hammered. I'm going to guess this is at 35.5. Yep, there you go. Yeah, I don't know, dude. I just there's so many places to invest that are exciting. Celsius is not the most exciting. You've got to really know this company inside and out if you're going to take a stab at it. But growth is slowing down, and even though growth is good, it's just slowing down. And people are thinking it shouldn't be worth as much as like Monster or some of the other energy brands. So that one, 35 is the technical level. If it breaks below 35, it's still holding up a little bit above it. Then you're going to probably see 30s if the downside continues. But the fact that it's holding 35 at least is not the worst thing in the world. And then we got the S&P right here at 551.33. All right. That is it for me. And that's done for today on the Market Open. We'll be back at 3:45. We do have some earnings after the bell. None of them that are that exciting. Jason will be on tomorrow to go through technical Thursday. So today after the bell, today's Wednesday. C3 AI is like C3 AI and ChargePoint. Those are the ones that kind of matter. Everything else is not that important. So we have 2 earnings after the bell. We'll discuss a lot more macro stuff, dive into it. I hope you guys enjoyed the Palantir interview. I thought it was pretty cool. Matt Babin, awesome guy. Got to meet him at AIPCon. Really showed where Palantir Energy and the future of energy is going for Palantir. So exciting stuff from that perspective. And I think it's all leading up to Friday, dude. It's all leading up to Friday. Is Robinhood a better bet than the Mag 7? So again, my perspective on Robinhood is that it's deeply undervalued for the growth they're about to show over the next few months. That's why I like Robinhood. Long term, I'm very excited for Robinhood, but is it safer than Google? No. Is it safe? Is it safer than Microsoft? Absolutely not, right? The Mag 7 are amazing. But to double on Robinhood, you need a $15 billion company to become a $30 billion company. For Google, you need it to go to $4 trillion, right? So like if from a risk reward perspective, if you're just focused on capital appreciation, I think there's some more juice in Robinhood, but obviously Robinhood's way more risky. It's contingent on the market. It doesn't have this massive search business like Google, right? So the Mag 7 are probably more safer than a company like Robinhood. But I think it will do better than some of the Mag 7, given their multiples have expanded and Robinhood still is showing more growth. All right. That's it, folks. Thank you all for joining. Thank you, Victor, if you're still here, for the 10 gifted subs. Means the world. And thank you, everybody, again, for the congrats on the 40,000 subscribers. S&P 500 right here at 551.82, down about 0.05%. Really appreciate it. Means the world. Victor, you are here. Okay, awesome. I love it. And maybe what we'll do, dude, to like pseudo celebrate is maybe on Friday. Hopefully the jobs report is good. Maybe I'll throw the StreamYard link and we'll have a bunch of you guys join the stream and we can just talk on Friday. Friday will probably be a long one because then we have TJ in the option segment, all that stuff. So maybe we do that on Friday like we did a couple months ago. But it'll be more fun if you guys join the stream and we get a great jobs report. So we got to see a good job. Then it'll be a really fun stream. If we get a crappy jobs report, be like, hey, Amit. I'll be like, hey, as I'm looking at my portfolio and it's crashing. So let's see what happens on Friday. But thank you, everybody. Appreciate it. Again, this is the greatest opportunity in the world. It means so much to me. The growth has been pretty strong. Again, I think a year ago, literally, we were at 200 people, and now it's almost 2,000 every day. So it's gone up pretty aggressively, and I think a lot of that has just been staying committed, grinding, being funny. Obviously, that part is like kind of the top of the core reason. TJ's in Vegas on Friday? He didn't tell me that. All right, so I guess TJ's not going to be on the stream unless he's free during that time. That's going to be early for him, though. That's going to be too early. That's going to be at 7 a.m. There's no way he's waking up at 7 a.m. on Vegas. In Vegas. Yeah, he's going to be hungover, so TJ's not going to be there. But yeah, it just means the world to me. It is very exciting to do this. Although, you know, some of you guys abuse me in the chat for my humor that you don't think is humor. That's okay. You know, this is the type of growing pains that comes with building this. But in general, dude, it means a lot. It really, really means a lot. I don't know how to say it in a way that shows how gracious I am, other than just like continuously reminding everyone that it means the world to me. Because there's two things about it. Number one, people are spending their time with you, and that's like, there's no way to communicate how much that means, because at the end of the day, people's time is all they have, right? You can lose money, but you only have a certain amount of time on this planet. So spending that time is very special. It means a lot to me because I'm a sort of more natural entertainer. I like content. I would say content creator, not entertainer. Some of you guys might be entertained, but I like really creating content. So for me, having this live format, it's so much more fun than recording a video and then uploading it, because you don't get the interaction that you get when you're live. And to get that interaction live, people need to spend time out of the day to join during the live, right? So that's the whole point of doing this live, and it just means so much that people are spending time out of the day to actually join. And then the second thing I was going to say is that, again, I've talked about this many times on the channel, but the media business is very, very rough. It's very, very aggressive. You guys saw my YouTube income the other day. It's like $4,000 a month, which is really not a lot of money in the grand scheme of things. You know, I'm doing YouTube for something much bigger than $4,000. I'm very appreciative of the $4,000, but the point of doing YouTube is to build a brand and to get more people in the world to know who you are. And to do that in this noisy attention economy, it's fucking hard, dude. Like, to get people to actually give a fuck about your ideas, your thoughts, your opinions, and spend time with you, it's really difficult. Like, I think it's cutthroat, competitive, ruthless, and more content creators every day are creating content. So for you to stand out, you just can't take a day off. You can't be late. You can't, you can't take a break. Like, this is just one of those things where if you stop going, the opportunity passes itself, and you have to take advantage of just being there when you know there's a chance to win. So I think this is that opportunity, and we're going to keep grinding. And I just can't say enough about how thankful I am that people continue to join, hopefully have some joy, and get value out of the stream. The one thing I will say, I don't know if I told you guys, but we're going to have someone, this is the final thing I'll say, and then I'll get out of here because I have to get into a meeting in 9 minutes. So I got to run. There's a CEO that's coming onto the show on Monday. And it's a company you guys know, but you guys have probably forgot about, but it's a very important company. He's an awesome CEO. We talked for 30 minutes last week on Sunday or on Monday, a couple days ago, and he's going to be on the show, and we're going to talk about his role in the financial ecosystem. One thing that he said that was really interesting was someone sent him the stream randomly somehow on Twitter. And this is a guy who's busy, right? CEO, he's running a multi-million-dollar company. He's like, yeah, shit to do. And he catches the stream in the morning. And he said, one of the things I like about your stream was that you take a lot of data and you condense it and try to deduce assumptions and biases and objectives from that data to make sense of it. I'm not always going to be right on it. Sometimes I'll get certain facts wrong. Sometimes I'll say things that probably might not make as much sense when you look at the data in its totality. But the goal is to get better every day, so that the more you join, the more I learn about how to condense that data, the more people get value from trusting me as a source that can effectively communicate that data. And that was the best compliment to me, because I really want this show, outside of the humor, which would have been a really good compliment, but he ended up not giving that compliment. Outside of the humor, I want it to be, you join and you get smarter when you leave. I think that's what I want the show to be. As I'm speaking right now, I kind of think out loud. That's what I want people to get smarter when they leave. Now, I know a lot of you in the chat are going to take that line and you're going to have a lot of fun with it for the next couple of weeks, because you're like, Amit, get smarter, huh? And you're gonna take some stupid shit I said, like, Amit, you want us to get smarter, right? Look at what you just said. But in general, in aggregate, I want people to join the stream. It's not Vlad. Although it's not Vlad, I'll just say although. That's all I'm going to say. Although. That's where I'm going to leave it. It's not Vlad who's coming on the stream next week, but although to the Vlad question. That's it. That's all I'll say. I want people to leave the stream knowing more about Jolts, more about the DOJ, more about unrealized capital gains, the good and the bad, more about Google's, antitrust violations, more about Palantir, more about, Nvidia's valuation and forward EPS to be able to justify a $150 price. Like, I want people to really walk away thinking, man, I get it. If someone asks me about it, I can explain it to them because I listened to Amit talk about it and he effectively broke it down. And then hopefully that just, keeps people coming back for the humor and for the value and information. So that is, that's what we're trying to do here. Francis Tess says, you do well. I like your candor, understanding of a lot of and willingness to learn. That's why I've been joining you twice a day, which seems crazy to me, but there is value. Yeah, some of you, the OGs that join twice a day, dude. All right, so the last thing I'll say is and then I really do have a meeting. I have to get to this shit. In 2025, we've got to do a meetup somehow. Like a really cool meetup. Like something, I don't know where it's got to be, but I want like lots of people to come. Like if we could get 100 people to come, I don't know where it would be. I don't know if that's London, New York, Vegas. I don't know what it is. This year's going to be hard for me to travel because I'm going to India, but next year we got to do something. It would be so cool to meet the OGs who are there twice a day. Like, it's just so awesome, dude. It's so awesome. Is it another hot CEO? I mean, look, I'm not going to judge the guy and say if he's hot or not, because that would be gay. He is kind of hot in my opinion, but I don't know. You guys will have to judge if he's hot or not, but he's a really cool guy, dude. He's so cool. And his company, I don't want to say the name of the company. I want it to be a surprise, but you guys are going to, it's not like the most important company in the world, but it is a very crucial company when we look at financial data. And a lot of you are going to love his insights because he was in the thick of it over the past couple of years with dealing with everything that's gone on. It'll be fun. I think you guys will enjoy it. So yeah, that's it. Thank you everybody for joining. Thank you for 40,000. Let's keep fucking grinding. This is the opportunity. This is the moment. We cannot stop. And that I hope will, I would assume that's applicable in everyone's journey in every part of their life. If anyone's trying to build anything right now, that's the other cool final thing I see. This is the problem with me. I just don't know how to stop fucking talking. Like I really have to get to this meeting, but I need to prepare some notes for this meeting. And this meeting starts in 4 minutes and I did not prepare those notes. So this is the final thing I'll say. I hope this journey has been, it's not Tom Lee, even though we'll get Tom Lee soon. I hope this journey for the people that have seen it literally go from 0 to 40K. Hopefully that's also exciting to people because I know that when I watch people's journeys and I follow creators and I see them, start off kind of here and then they end up becoming there and they go through that process. I just hope that their head's in the right space, that it doesn't go to their head, and that they stay humble and they make sure to remember that the people are the only reason why they're even in this situation. Meaning it's not because they're so great, it's because other people actually are joining and care about them. And that humility paradox can never be sacrificed or compromised, in my opinion. And B, it's inspiring, And I think Kobe Bryant had this tweet, or not this tweet. This I'm so on Twitter. This quote back in I think 2015-ish when he retired and he started like doing more interviews. And he said, the greatest thing you can do in your life is be an inspiration for other people. He's like, that's the best thing you can do in your life. It's like, if your story can somehow provide hope to other people, because after you do well, you want other people to do well, right? That's the whole point of philanthropy. After you make a lot of money, you want, outside of the tax write-offs, you want to be able to give to other people. So, I'm inspired by lots and lots of things in the world, and hopefully this journey, as we keep it going, is inspiring as well. And it just keeps providing more optimism and hope out there into the world. As I say that, the camera dies because it is time to go. Thank you, everybody. Appreciate it. It means the world. I'll see you guys at 3:45. Lot to discuss in there in the context of the macro and some earnings. And we'll keep going from there. My favorite yapper. Thank you. I appreciate it. Bye, everyone. Have a good one. Good night. I'll see you guys in a couple hours.